Market open. It's a minute to go until the start of cash equity trading. I'm Danny Berger in London with your top stories. Fears of escalation. AP reports a rocket that hit a Polish village was probably fired by Ukrainian forces at incoming Russian missiles. We're live in Warsaw and at the G20 summit in Bali. Meanwhile, a barrage of missiles target Kyiv and other locations across the country, knocking out power for 7 million households. President Biden calls the attacks merciless. Plus, it's official. Donald Trump says he's running for president in 2024, complicating the race for the Republican Party. Let's take a look at futures just moments before this market opens. Not a lot of action. It is unched in DAX, but I should say to start the futures trading, this all was down heavily. It was that geopolitical concern, the rocket falling in Poland, but that has been undone. Now we're having a very calm market and not a lot going on. But what is going on is that market open. So let's take a look at how these markets are shaping up. And so far, it is pretty darn flat. FTSE 100, that is just up 0.04%. There's a lot going on, from geopolitical concerns, from politics to energy. So there's not a lot of meat to really trade on one way or the other, especially as we consider a potential peak in the inflation story. But if I can get to our cross-asset board, because one inflation theme that certainly has not peaked is what's happening in the UK. UK inflation, that hit in the last hour, coming in at a 41-year high. So US 10-year yields, those are up 3 basis points. Same thing goes for gilt yields, 10-year yields. We continue to trade that inflation story. It does mean we're looking at a weaker sterling versus the euro. It is down 0.3%. Now, one reason I didn't show it versus the dollar, your cable rate, is because generally the dollar is weaker today. That's down 0.1%. Again, it was stronger trading on those potential escalation narrative, but the fact that we have a weaker dollar does seem like it's allowing some of these risk assets to do better. Now, what are the risks lay out there for this year and the coming? Let's try to assess those with Bloomberg and Live Managing Editor Mark Cudmore. And Mark, I know when we're talking about risk, you're specifically looking at the cost of U.S. debt. What do you got for us?
Yes, good morning, Danny. Look at this chart. It's gone a bit parabolic recently. What is it? Well, it's the estimated annualized cost of servicing the U.S. debt. And recently it's risen to $685 billion. That's as of the end of October. October saw it increase by the largest amount ever. And in fact, the last 8 months have all been the largest 8 months in terms of increase of this measure. Now you can see that this kind of move has just never been seen quite before in history. We got a little bit worried about it back in 2018, but this is completely dwarfing that. And this is in context that we do have a debt ceiling that is approaching, that is imminent, a debt limit. And I wonder whether that's going to make those conversations even more fraught if they don't resolve it in the lame duck session. Because this is going to become a real problem for next year, because it shows the US is fiscally constrained. And I think that's going to weigh on the dollar a little bit next year. You can't trade off this in isolation, but if we're trading a narrative of twin deficits and an expensive dollar, I think people will start talking about this.
Yeah, and as someone who lives in the UK, fears of a growing government debt load is certainly very alive and well here. Mark, thank you so much. Great stuff as always. Bloomberg and Live Managing Editor Mark Cudmore. Let's dive more into these markets. Joining us now is Laura Cooper, Senior Investment Strategist at BlackRock. Laura, thank you so much for joining this morning. Always great to see you. So one of the trades that has felt very strong over the past month is sort of the peak is over trade. You have the dollar off of its highs, stocks off of their lows, yields off their highs. Do you want to trade that?
I think it's probably premature to make that trade at this point. Yes, we did have those CPI print, the PPI print in the U.S. come off. It does suggest that peak inflation narrative is going to play out. But again, this is a Fed that is quite determined to actually potentially over-tighten to try to curtail those price pressures. And we think that's going to result in a policy-induced recession. So I think it's too soon to trade this kind of Goldilocks scenario that the Fed is going to have an imminent pause.
And so when you look at, for example, a terminal rate, it is only, I believe, about 4 basis points above that post-CPI release, despite the fact we've had quite a few Fed officials say, hey, we've got a ways to go. So how misguided is the market in pricing that terminal rate? Do we really need to pump up those bets at this moment?
I don't think that is the case. If anything, I think that's been probably the most surprising thing that's come out of the price action on the back of the last 2 CPI prints, in the sense of that terminal rate has been fairly sticky. But I think it's a case if we start to see markets pare back those bets, if we start to see more signs that growth remains resilient, but those price pressures are coming down, I do think that that's probably premature. And the fact that we have seen equities rally quite sharply from the October lows on these expectations of a Fed pivot, I think that's not accurately pricing in the recession risks that are still going to come. Because even if the Fed follows through on that terminal rate pricing, we think that's sufficient to actually have a fairly short and shallow recession, but through the first half of next year.
You know, I also do wonder, because, okay, that's a first half of next year's story, but as we head into the end of the year, talk to me about the seasonal headwinds, considering liquidity in many of these markets has already been an issue, and now we're getting into the holiday season. So how do you sort of handle the market through the end of the year?
It's a great question, and I would expect we're going to see bouts of volatility through the back end of the year. As you mentioned, seasonals are quite favorable for equities through the December. You know, we tend to see that Santa rally, but at the same time, there is still this kind of in the air, what is the Fed going to do? We have seen them well telegraph that we are going to likely see a 50 basis points move in December. Any kind of gyrations around expectations of that, I would expect to feed into equity markets. So yes, it's probably kind of seasonal is favorable, but probably not buying the dip at this juncture.
I see. Okay, so too soon to kind of trade peak in Fed hawkishness, peak in inflation. What about the pivot in China? Is it too soon, or is it time now to start that trade, to follow the rally we've seen in Chinese equities?
Well, I think at the margin, with the fact that we are seeing that easing of the zero COVID policy does provide a little bit of a boost in terms of that growth rebound next year, which does kind of suggest that we could potentially see some attractive opportunities, notably given the extreme drawdown that we have seen in the equity markets there. Valuations are quite attractive. But when we overlay that with these macro uncertainties that remain, this is a global economy that is going into a downturn that is feeding onto the export picture there, and as well the geopolitical tensions. Yes, we've seen some of that easing so far this week, but I think it's too soon to declare that we want to have outright exposure in China. So we're still quite cautious on the assets there.
I mean, we certainly got a reminder this morning when it comes to geopolitical tensions, how fragile this market is. When rockets land in Poland, of course, AP now reporting that it was a Ukrainian defense of a Russian missile coming in. So those fears no longer in this market. But how are you thinking of Russia-Ukraine tensions in terms of how you're trading? Do these markets need to have more premium of potential escalation priced into them?
Well, it's a great question. I think it's probably a tail risk at this point, but ultimately we do still remain underweight developed market equities, largely because geopolitical tensions, yes, remain a key component of that, but largely because when we look at equity benchmarks, they're not accurately pricing in those recession risks, whether we look at Europe, whether we look at US, and flows tend to capture that story as well. We saw significant capitulation in terms of European equities. We're starting to see some buying there, but not enough at this juncture for us to have conviction that these are risk rallies that can be sustained.
Yeah, I mean, it was interesting to see the latest Bank of America survey saying that 59% of those respondents see upside for European equities over the next 12 months. I do wonder, though, how tied or how necessary it is that the weather cooperates, really not just for equities, but the euro as well.
And that's a key question. I think markets have probably gotten ahead of themselves in the fact that we have had a fairly mild season so far this year. Those natural gas stockpiles have come in above expectations. But ultimately, this could be quite a binary outcome yet to come. So the fact that we could have a much colder winter through December through January, that does suggest that the growth risks are still quite acute. And notably, we expect to have multiple quarters of contraction in the European economy. We started to see that come through in PMI gauges. And so I think that still keeps us quite cautious on the overall outlook. And then overlay that with the ECB and the potential for them to continue to tighten rates. The fact that we have seen inflation continue to surprise to the upside. It's really hard to see conviction for those green shoots emerging that would want us to pile back exposure across the continent.
Laura, as always, so fantastic to get your thoughts today. Thank you so much. Laura Cooper there, Senior Investment Strategist at BlackRock. Now let's get back to that geopolitical story. Initial assessments by the U.S. indicate a rocket that hit a Polish village was fired by Ukrainian forces at an incoming Russian one. That according to a report from the Associated Press, which cited 3 U.S. individuals. G7 leaders who were already gathered in Bali for the G20 summit, they held an emergency meeting on that, which came during a wave of Russian rocket attacks on Ukraine. Let's go to Anne-Marie Horton, who's at the G20 summit in Bali. Anne-Marie, what have we heard from leaders at the G20 following this event?
Well, Dan, I think the biggest takeaway is the question our very own Josh Wingrove asked the president, which is whether or not this missile came from Russia territory. And the president said that it is unlikely given the trajectory of that rocket. So what we really don't know is, one, where the rocket was launched. Potentially it was launched within Ukraine, and either if this was a Russian missile that missed its target or it was Ukrainian counteroffensive on that rocket that ended up landing in Poland. So there is a lot of questions that are being asked, which is why G7 leaders, NATO leaders that met with the president this morning in this emergency huddle on the sidelines of the G20 are not quick to come out with their analysis yet. The president said very clearly he wants to see a complete investigation. At the same time, you know, he was woken up very early this morning to get on a call with his counterpart in Poland and telling President Duda that he, of course, maintains his support for Poland and that his support for NATO is ironclad.
Anne-Marie, we're also awaiting leaders finalizing that communique on the last day of the summit. To what degree can we expect Russia to be named, Russia to be specifically condemned in what we hear from the leaders?
Well, we actually have the communique, and this going into the summit is kind of extraordinary. They're even to come out with a communique that says G20 at the top, given the fact that Russia is a part of the group. But how they were able to fudge it, if you will, is that they say that most countries condemned Russia's invasion of Ukraine and the impact that has had on civilians and the global economy writ large, whether it's energy, food insecurity, inflation. Obviously, this is a huge topic today in the United Kingdom with inflation north of 11% and food and energy prices driving inflation. So this is affecting the developed world as well as the most vulnerable countries around the world. And the communique really gets to the heart of that. And that's how they were able to do it. And U.S. and the allies were able to really get most countries on board to use that language, even though there were others that wanted to shy away from that.
Anne-Marie, thank you so much. Bloomberg's Anne-Marie Horton there at the G20 summit in Bali. Coming up on the program, Canada Pension Plan Investment Board President and CEO John Graham. He's at the Bloomberg New Economy Forum with Francine Lacqua. We'll bring you that interview next. This is Bloomberg.
last 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Welcome back to the Open. 15 minutes into your European trading day, most of these benchmarks falling, save for the FTSE 100. Energy is the only sector this morning that is pushing into the green, potentially helping out the FTSE 100 there. Let's now turn our focus, though, to the Bloomberg New Economy Forum in Singapore. It's day 2, and global leaders from business and finance are discussing how to utilize capital to solve the world's problems. Francine Lacqua joins us now with a guest. Francine.
Yeah, Danny, thank you so much. We are measuring progress, and of course, we're trying to figure out what's the smart money doing to try and deploy some of the capital. I'm delighted now to be joined by John Graham. He's the Chief Executive Officer of the Canada Pension Plan Investment Board. John, thank you for joining us. We woke up this morning. We started, of course, a lot of the panels. We were expecting a debrief by Jake Sullivan, the National Security Advisor. He never showed up because he had bigger things to do. How does geopolitics actually factor in your longer-term investment?
Yeah, well, I think right now, geopolitics is almost trumping capital markets considerations. Think back a few years ago, I'm not even sure people were pricing in geopolitical risk. And today, it's really dictating not only the investment decisions, how we're pricing risk, but also what's actually coming up, what type of investments are becoming available.
But how do you do it? So do you look at it through the lens of supply chains that will be hit, or a splintering, I guess, of globalization? Yeah,
one of the trends I think all investors are facing right now is, think back over the past 10, 20, maybe 30 years, industrial policy, economic policy, it was really profit maximization. Just try to maximize global profits. We sit here today, and for certain sectors, there's a real national security lens being applied, whether it be semiconductors, quantum computing, AI, pharmaceutical APIs. There's a national security lens. Now, that's not a global profit maximization lens, but it does offer real interesting opportunities with domestication of some of these strategically important sectors.
But this is almost at a juncture where we need to deal with inflation, exactly figure out what central banks will do, and there could be a lack of liquidity out there in the markets.
Yeah, well, liquidity is probably something we're spending a little bit of time on. And as we think about our portfolio and think about our portfolio in these markets, which are very volatile, right? I mean, I think we've seen volatility that we haven't seen in a long time. Markets could be going sideways for a little while. Liquidity is probably more valuable today than it has been in a long time. And one of the questions we wrestle with is how we should be positioning our portfolio right now.
Which is how?
Well, one thing is more liquidity, and thinking about liquidity and the value of that liquidity in the portfolio.
So what, you're away from treasuries? I know there's liquidity concerns in the treasury market. What's your top player right now?
Well, I'd say treasuries are still pretty liquid compared to a lot of other asset classes. At CPP Investments, we have about half of our assets in the private markets and about half in the public markets. As we look at the market today, look at inflation, certainly want to get more in infrastructure, want to get more in inflation-sensitive assets, but our portfolio is $529 billion. We can't move that overnight. What we can do is have enough dry powder and enough liquidity so when interesting opportunities present themselves, we can invest.
What does a crypto blowout mean for you? I know you were also an investor in Ribbit.
Well, we have no direct investing in crypto. We are invested with some general partners, some venture capital firms that will invest in crypto. We spent a lot of time looking at crypto over the past few years. I've been in this seat for a couple of years, and we spent a lot of time doing deep dives on crypto. Have never got to the point that we've done a direct investment in crypto. But it was a multi-trillion-dollar asset class. So as an institutional investor, we thought we need to understand the space, and we need to understand at a few $trillion what the potential impact could be if this thing starts to move and has a lot of volatility.
I mean, you talk about move, we're almost seeing an implosion.
Yeah.
Right? What will be the long-term effects of FTX going down for institutional investors worldwide?
Well, I think for institutional investors, I think a lot of institutional investors have also tried to understand the space and have tried to dip their toe into the space to understand a little bit better. And to date, I think it's probably been a challenge to, as a long-term investor, to find a place where you can be comfortable with the risk profile.
When you look at the profile of inflation, do you think we've reached peak inflation? And is the market overestimating the fact that we've reached peak inflation so that, you know, maybe they're discounting interest rate hikes from central banks around the world?
Yeah, well, I'm not a prognosticator of inflation for sure. I think our perspective, yeah, and our perspective would be that interest rates will stay high. Interest rates will stay higher for a little while. That central banks will be very cautious before backing off of interest rates. So thinking about what that means, right? What that means that all of a sudden now government bonds are yielding mid-single digits. What's the longer-term impact on portfolio construction when you have the search for yield moving into other asset classes, and now government bonds are yielding 4 or 5%? And over the next 2-3 years, how is this going to impact the institutional investor space with portfolio construction?
But as interest rates go up, do you worry about some of your investments, for example, in private markets, where interest rates will really hurt them in terms of leverage?
Yeah, well, I wouldn't say we worry about our investments, but we certainly think about what the cost of borrowing would be. And the cost of borrowing has changed. And the one area that in the credit space, and I used to run our credit business, is what does this mean for refinancings? Right. What does this mean for when refinancings come up? Now, a lot of the debt that's out there, it's covenant light. You're not going to see this big default wall, but with refinancings, when cost of borrowing is in the mid to high single digits, it's something that on the horizon will have to be looked at. But it gets to my point on the value of liquidity. And having liquidity right now in these markets is going to be pretty valuable.
But John, going back to your point on foreign affairs and the fact that maybe not everything is priced correctly at the moment, will you see it being tested by, for example, Chinese appetite for treasuries or for dollar as the supreme currency of the world?
Well, when I think about it's not being priced, I think the challenge is really going to be how people think about the allocation into different countries around the world. And right now, a lot of countries are just foreign to investors and how they think about pricing that risk. And at the same time, does that just cause an opportunity, right? So at CPP Investments, we've built out a global footprint. Yep. We have 8 offices outside of Canada with a view that you need to be local. You need to build that local understanding, local relationships to really try to price that risk.
Do you have a favorite country? I mean, favorite country for investments at the moment?
Favorite country for investments. We try to build a globally diversified portfolio and not get overexposed into one geography, for sure.
Hedge your bets. There you go. John, thank you so much for joining us today. John Graham there, the Chief Executive Officer of the Canada Pension Plan Investment Board. With that, Danny, I'm going to send it back to you in London. Of course, we'll have plenty more throughout the day here in Singapore.
Really looking forward to that. Francine Lacqua there with the CEO of the Canada Pension Plan Investment Board. Really fascinating to hear a pension really known for kickstarting the pension appetite in private equity. Talk about the need to look for more liquid assets in this current environment. Well, coming up, we're going to go live to Brussels as NATO races to contain the fallout after rocket lands in member state Poland, killing 2 people. Some of the worst of those fears subsiding. We'll have more on that story next. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Welcome back to the Open. About 25 minutes into the European trading day with mixed markets, but the benchmark is heading 0.3% lower. Now let's get to the Bloomberg Business Flash. With that is Laura Wright. Laura.
Thanks, Danny. Bloomberg's been told that Goldman Sachs paid over $12 million to a veteran executive who complained internally about a toxic workplace for women. Sources say the bank settled with the departing partner 2 years ago in a deal that kept secret her detailed account of senior executives making vulgar and dismissive comments about women. Goldman says it disputes the report and that it contains factual errors. U.S. and Bahamian authorities are said to be discussing the possibility of bringing Sam Bankman-Fried to America for questioning over the collapse of crypto firm FTX. Bankman-Fried has tweeted that he would meet regulators in person and that he believed FTX US had enough money to repay its customers. UK Chancellor Jeremy Hunt is set to confirm he is lifting the cap on bankers' bonuses when he delivers his autumn statement tomorrow. Hunt has reversed almost all of his predecessor's economic proposals in an effort to calm markets, but Bloomberg understands the reform to top bankers' pay will stay. That's the Bloomberg Business Flash. Danny.
Laura, thanks so much. Laura Wright here in London. Coming up, we're going to talk FX. We'll be speaking to Barclays Global Head of FX Strategies, Themis Theotakis, on dollar strength, China reopening, and so much more. This is Bloomberg.
about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for the subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
Welcome back to the Open. 30 minutes into your European trading day, here are your top stories. Fears of escalation. AP reports a rocket that hit a Polish village was probably fired by Ukrainian forces at an incoming Russian missile. We're live in Brussels. Meanwhile, a barrage of missiles targets Kyiv and other locations across the country, knocking out power for 7 million households. President Biden calls the attacks merciless. Plus, it's official. Donald Trump says he's running for president in 2024, complicating the race for the Republican Party. So 30 minutes into your trading day, let me show you where we've started this day. We are trading down about 0.3% for the Europe Stock 600. Now, the future session at the very beginning, it was much more negative as we started to price in more geopolitical risk of escalation in the war in Ukraine. Of course, some of that has come off with the latest AP report suggesting that it was more of a defensive move from Ukraine that led to this rocket landing in Poland. But still, the only two sectors into the green are energy and insurance. And I mean just barely two. Insurance is 0.02% ahead, so not much movement there. Energy, that might be helped by some of the earnings. I'll get to that in a moment. At the bottom, retail and autos, real estate, travel, leisure. It does feel like a lot of these higher beta sectors are the ones that are moving off. So more of a textbook risk off type of move today. Now, in terms of what's moving this individually, let me get you some of the movers. Siemens Energy reported earnings today. Now, their earnings for 2022, they are difficult. They are not issuing a dividend because of that, because they still have supply chain woes, costs are higher. I was speaking to the CFO earlier today who said, look, we can pass on those prices to consumers. We have good momentum. 2023 is going to be a better year. They've upgraded their outlook, so that means shares are up more than 4%. Air France KLM, this is a convertible bond offering, about 300 million euros worth of doing so. This is going to be used to pay off some of the debt that the French government currently holds. But of course, a convertible bond offering, that is a dilutive event, so shares moving lower by nearly 11%. Finally, Mercedes-Benz, they are having to cut the cost of some of their EVs in China by as much as $33,000 just because there's so much competition there and sales aren't keeping up. Those sending shares lower by more than 3.6%. Let's get back to one of our top stories this morning coming out of Poland. And U.S. President Joe Biden and European leaders are urging caution after a rocket fell in a Polish village just over the border from Ukraine. Let's go to Brussels where we can speak to Bloomberg's Natalia Jozdiak. So Natalia, what do we know so far? What do we know why this happened? And how is NATO reacting?
Yeah, so there's still a lot of open questions at the moment. It's unclear whether this was fired from Russia, as we heard from President Joe Biden last night. And there are even suggestions from some officials that this may have actually been Ukrainian missile defense sending a Russian projectile off course. We should hopefully know more after a meeting of the NATO ambassadors late this morning. NATO Secretary General Jens Stoltenberg will brief the press around midday, so we'll hopefully have a better understanding after that. We know that Poland has suggested it might invoke Article 4 of NATO's treaty, but they have not done that yet.
Okay, Natalia, thank you very much for the update. Bloomberg's Natalia Drozdiak in Brussels. And just a reminder, the Bloomberg New Economy Forum, it is underway. As part of that, we're going to get the opportunity to hear directly from Ukrainian President Volodymyr Zelensky at the forum. That will be afternoon time. If you're in Asia, if you're in Europe, that will be in the morning. Now, along with the New Economy Forum, we of course have the G20 taking place in Bali. As part of that, we are now seeing UK Prime Minister Rishi Sunak, who has just started a press conference there. That was after earlier this morning, him and US President Joe Biden met. After this, we had Biden already speak to press. This is when he called Putin's attack on Ukraine merciless and way over the top. For what it's worth, Sunak also agreed. He also described the US as the UK's closest ally. So again, this is Rishi Sunak speaking at the G20 in Bali. Now, to the wider market story, Barclays have dropped their bullish dollar stance and shifted to neutral. The bank also sees a shift in China's reopening, potentially limiting or potentially changing the outlook. To discuss this, pleased to say, we're joined by the man himself, Barclays Global Head of FX Strategy, Demos Theotakis. Demos, thanks so much for joining this morning.
Thanks for having me.
So dollar call. Are we at peak dollar and why?
I think so. And I think that there's a couple of reasons. The market has focused a lot on the dynamics of inflation in the US, which has clearly played some part. But I think that what the market has missed over the year is that probably the single most important factor that drove the dollar stronger and the euro lower has been the collapse in global growth dynamics, particularly the dynamics that came out of China. China is a huge part of the global growth engine. It's very important for open economies. US is a closed economy. Europe is an open economy. Asia is full of open economies. And China has been growing very softly. A big chunk of this has been the zero COVID policy and the tightening in property markets there. And there's some signs that tentatively there's some risk that these policies may be changing. And that is crucial for the outlook of the dollar and the path ahead.
Does that mean it doesn't necessarily matter when the Fed stops tightening or how far they go as long as China is having those reopening tendencies?
Well, let me put it like this. The Fed is at the late side of its hiking cycle. Whether they raise rates to 5, above 5, below 5, it will matter locally, but not strategically, right, for the trend. However, even if the Fed peaked, even if the Fed cut rates, that wouldn't be necessarily change the dollar direction. In 2019, the Fed cut rates and the dollar was strong, primarily because global growth was weak. So the Fed is a necessary but not a sufficient condition. The sufficient condition would be a global growth acceleration, and to get that, you need China to play ball.
You know, we were talking during the break this idea that part of the reason the dollar has also been so strong is because it's this haven trade. You know, regardless of what asset class you're trading in, it's been the dollar that has continued to work. If that trade ceases to be the dominant trade, is there something else that takes its place? Does the Swissy come back as a haven? Can the yen come back as a haven? What becomes the haven trade?
I think that's a great question, and you're hitting the nail on the head. A lot of asset allocators and fund managers have found that being long the dollar offsets some of the losses that they've experienced across different assets. And I think to answer your question, it matters also what happens to US growth ahead. If we had like this environment where inflation came down, but growth was okay, then you wouldn't need a hedge because equities would do okay, bonds would do okay, and everyone would be happy. But if US growth, for whatever reason, collapsed next year, the only safe haven in my mind, which would be consistent with that environment, would be the yen.
Even if the BOJ is still easing?
Even so, the biggest driver of dollar-yen has been and remains the change in real rates in the US. So if real rates in the US start to come down for whatever reason, either because of policy or because of growth worries, the yen becomes live again.
I just want to quickly fit this in. We're almost out of time, but of course we get the UK autumn fiscal statement tomorrow. We had inflation come in 11%, stronger than expected. What do you do with sterling right now? It has been rallying off of that dollar weakness. Do you follow that trade? Does it have any legs?
So first, against the dollar, it has been mostly a euro trade. Euro sterling has been roughly flat. Second, what I would say is that the pound is cheap. So from a very long-term perspective, I don't worry that much. I do think, though, that because of the tightness in the UK labor market, the Bank of England needs to rein inflation in. The Bank of England cannot raise rates too much because it will hurt the economy. So the burden is falling on tight fiscal policy. So tight fiscal policy plus a Bank of England that is reluctantly raising rates probably means that the pound goes slightly weaker in the near term against the euro. The broader dollar, again, is a different question, as I mentioned earlier.
And almost as if he knows what we're talking about, Rishi Sunak speaking in Bali right now, saying my #1 priority is dealing with the economy, and we need to get a grip with inflation. Themos, thank you so much for joining us this morning. Themos Viatakis, Barclays Global Head of FX Strategy, joining us this morning. Now, just want to bring you a report coming out from the AP citing unidentified defense official saying that an exploding drone has hit a tanker off Oman. This has caused Brent and crude prices to spike. They were down this morning. However, now we're looking at $94.50 a barrel on Brent, 72 on NYMEX crude. We'll keep you up to date with those what's currently happening in Oman. Again, an oil tanker struck in an exploding drone attack. Coming up, we're going to have the CEO of the International Council on Metals and Mining live from the Bloomberg New Economy Forum in Singapore. That interview shortly. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to the Open. About 43 minutes into your European trading day, equities heading lower, save for the FTSE 100. Also have earnings coming through from China tech giant Tencent. Revenue has missed for them. They've been struggling with revenue. It fell in the prior quarter given the macro headwinds. However, net income, it is a beat coming in at 39.9 billion yuan. The estimate had been for 25, so a pretty hefty beat there. Online advertising sales, those also coming in stronger than expected despite weakness throughout the rest of the industry. Tencent also offering up a special dividend. They're doing so through Meituan shares, 958 million Meituan shares. So a miss on revenue, but a beat on net income. So it's day 2 at the New Economy Forum in Singapore. Among the big topics, it's geopolitical tensions, record inflation, and monetary tightening. One of the other big macro stories has been commodities. That war in Ukraine, it's hit wheat, fertilizers, and natural gas. For more on this, let's toss over to Francine Lacqua, who's at the Bloomberg New Economy Forum in Singapore with a guest. Francine.
Thank you so much, Danny. I'm here with Rohitej Dhawan, International Council on Mining and Metals Chief Executive Officer. Ro, thank you for joining us. I mean, you really have the job that no one wants. No offense, but you're trying to make the mining industry. So there's 3 challenges. You need to make sure that we have enough resources for the transition. This is cobalt, this is copper, this is lithium, and others. But it's also about decarbonizing these big polluting industries so that we go into the transition.
It's a fascinating job at a fascinating time because the world needs these metals and minerals in order to decarbonize through renewable energy. And we need to manage our own impacts as we do so. So let's put some numbers around it.
Yep.
Globally, our industry and the use of our products contributes about 10% of global greenhouse gas emissions. 7% of that is steel, 2% aluminum, and about 1% all the other metals and minerals that we produce. Now, when it comes to our own impacts, 2 main impacts. One is the diesel we use, and the second is the electricity we use.
Okay, but do we have enough cobalt for the transition? If we want to green the economy and hit the goals that we have for 2030 and beyond, do we have enough of the stuff?
So the amount that we produce is going to have to grow exponentially. We produce about 150,000 tons at the moment. That's going to grow up to 20 times over a 2030 timeframe. The sense is in the short term, there is supply coming on stream, but from about 2025 onwards, there's probably a shortage. Now, there's no shortage in the Earth's crust. We know we have enough resources and reserves. It's about producing it in a sustainable way.
Right, and getting them out in a sustainable way. So talk to me a little bit about your Mining and Metals Council. How many people do you have inside it? You have basically the big ones. That's what, 50% of world production?
26 companies accounting for about 1/3 of the global industry. We have 10 principles of responsible mining that are a condition of membership for every company, but we encourage everybody else to adopt the same principles. So the idea being that wherever we mine, we do it as responsibly as possible.
But as responsible as possible, can you be more aggressive in those targets, or is there a danger that some of the members leave you?
Well, we always try and push the bar up further. So we made a collective net zero commitment last year. We've made a series of commitments around transparency. We made commitments around diversity, equity, and inclusion. We're working on commitments on nature. So we're constantly seeking to up the bar collectively because the whole industry benefits when we produce responsibly.
Right, we caught up with a lot of chief executives here who say, look, if you look at a lot of the mining resources, certainly in Africa, this has been for the last 10 years been monopolized or certainly invested in by China that has a longer, better term plan than Europe and the US. Is this fair?
All countries are looking at Africa now. Certainly China, which has a presence in Africa already, Europe and the US are looking to increase their presence because Africa is home to many of the critical minerals we're going to require. And African governments want productive partnerships so that the citizens benefit. Now, that will look different in different parts of the world depending on who the investor is, but ultimately it's got to be on the basis that where the minerals are mined, citizens benefit.
But is this almost a proxy war? If we look at the U.S.-China tension on semiconductors, on again access to a lot of these rare earths, has the West already lost that battle?
I don't think so, because there's a lot still to play for. There's another 20, 30 years where the story of the energy transition is going to be written. And in that process, there's going to be different ways of working that perhaps we haven't had in the past. What's encouraging to see is finally that governments in the West have woken up to the reality of how critical these minerals are, how important it is to secure the supplies, and in doing so, how important it is to make sure that standards are high.
How has the war in Ukraine changed, actually, our race for a lot of these minerals?
Well, as a result of the war in Ukraine, we now know that in the future we want to have greater energy independence, particularly in the West. And the best way to do that is, of course, a greater proportion of renewables in the mix. And we know that, for example, a wind turbine takes 9 times as much copper as a gas-fired power plant. And that's why we're seeing governments more interested in securing the supplies of those critical minerals like copper, like lithium, like cobalt, to make sure that in the future we can be more energy independent.
Is there a problem of timeline that if we're going to hit the targets, we need a lot more of them faster?
Yes, it takes somewhere between 8 and 12 years to bring a new mining project on scale, one of the large ones, and we simply don't have that time if we're going to meet the goals in 2030. Copper, for instance, we produce 21 million tons at the moment. We're going to have to go up to nearly 30 million tons in 2030. Even if all our projects currently come on stream, we're still likely to be short. So we're going to have to work together to somehow compress those timelines, but in doing so, not lose sight of responsible production methods.
All right, Ro, thanks so much for joining us. That was Rohitesh Dhawan, International Council on Mining and Metals Chief Executive Officer. With that, Danny, I'm going to send it back to you in London, and then we'll also have a good conversation on finance coming up from Singapore a little bit later on.
Really looking forward to that. Francine, great stuff as always. Francine Lockwood there at the New Economy Forum in Singapore. Let's get to some of our other top stories this morning with the Bloomberg First Word News is Laura Wright. Laura.
Thanks, Danny. President Biden says it's unlikely that a rocket which struck inside Poland's border with Ukraine was fired from Russia. He says that's based on initial assessments of the trajectory. Poland says 2 people were killed by a Russian-made rocket that fell about 6 kilometers inside its territory. Russia denies being behind any strikes on targets in that area. Donald Trump has formally entered the 2024 U.S. presidential race. Minutes before announcing his candidacy at Mar-a-Lago, Trump's campaign filed federal paperwork to confirm that he is running again. Candidates endorsed by Trump floundered in key races last week's midterm elections, prompting calls for some Republicans for the party to move on.
In order to make America great and glorious again, I am tonight announcing my candidacy for President of the United States.
NASA has launched its most powerful rocket in 50 years, sending an uncrewed capsule skyward on a 25-day mission to orbit the moon and return safely to Earth. The mission, called Artemis 1, marks the inaugural flight of both the SLS rocket and the Orion crew capsule. It kicks off NASA's multi-mission Artemis program, which is focused on sending astronauts, including the first woman and the first person of color, back to the moon's surface by as early as 2025. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Danny.
Laura, thanks so much. Laura Wright in London. Coming up, a 41-year high in UK CPI. Inflation hits 11%. We discuss what that means for fiscal and monetary policy next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. About 54 minutes into your European trading day. Softer DAX this morning, down about 0.4%. We're now basically unchanged on the CAC 40. There we go, unchanged. The FTSE 100, that is up 0.1%. Moving higher in this market, though, is Vodafone announcing that they will begin a buyback of £580 million worth of shares. It was up 1.3%. It's now just below 1%. This is partially to offset an increase in shares as a result of a convertible bond offering. So maybe the reason that's just offsetting something else already out there means that we're not getting a massive rally at this moment. Let's stick with the broader UK story, though, and CPI for October hit a 41-year high, rising higher than expected to 11.1% on the year. All of this intensifies a brutal cost of living crisis that has been engulfing the nation. That's pressure on the Bank of England to raise rates and on the government, which is set to deliver its autumn statement tomorrow. For more, we're joined by Bloomberg's Lizzie Burden. Lizzie, let's first start with that data. What did it show us?
Well, I'd just say, first of all, what a surprise it was. There was only one economist in the 35 we surveyed who saw this coming. It's driven by energy prices, despite the government's support on energy. So it makes it really hard for the Chancellor, Jeremy Hunt, in his fiscal statement tomorrow, to argue that that support should be more targeted. That's what the Institute of Directors is saying, at least. And again, it's the poorest families who are being hit hardest here, because it's also food price growth that's driving this. For the Bank of England, as you say, this beat means one thing: more hikes. And as a result of this print, money markets are now pricing for interest rates to peak around 4.65% in August. But the good news, if there can be in this, is that it seems from the pricing that inflation has now peaked.
So you mentioned the autumn fiscal statement that we're expecting tomorrow. What are we expecting out of it?
Well, I've been speaking to economists who've been advising Jeremy Hunt. Of course, he doesn't necessarily need to take their advice, but what they are saying is that he doesn't need to be too worried about the tax burden rising as a share of GDP, because of course public services cost more. You've got a growing and aging population. Now, the question really is how much he backloads spending cuts till after the 2024 general election. And there's a brilliant story by my colleague Emily Ashton on the terminal today about the human cost of austerity. How much more austerity can there be after all the cuts former Chancellor George Osborne made, after the pressure of inflation on government budgets? But the FT is also reporting that Jeremy Hunt is planning to keep the banker's bonus cap, the scrapping of the banker's bonus cap, as Kwasi Kwarteng was going to do. But that's really controversial, and even more so after the Prime Minister Rishi Sunak's comments yesterday criticising nurses for demanding a double-digit pay rise, and that's even more controversial after this big inflation print.
Certainly, Lizzie. Well, I know you're going to be reporting on that for us, the autumn fiscal statement. Really looking forward to that coverage. Lizzie Burden there, thank you so much. Coming up, we have Bloomberg surveillance for you. Fran will be out from the New Economy Forum in Singapore. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at the Bloomberg New Economy Forum in Singapore, and here's what's coming up on today's program. Fears of escalation. AP reports a rocket that hit a Polish village was probably fired by Ukrainian forces, and an incoming Russian missile. We're live in Brussels. Meanwhile, a barrage of missiles target Kyiv and other locations across the country, knocking out power for 7 million households. President Biden calls the attacks merciless. Plus, it's official. Donald Trump says he's running for president in 2024, complicating the race for the Republican Party. So let's look at the markets. I think we may also get some lines on the ECB. And actually, if you look at U.S. futures and European equities, Danny, they're rising. The risk of subsiding about an escalation with NATO.
Exactly, Francine. There's a lot to be concerned about, potentially adding to that. We just out now, Francine, have the ECB Financial Stability Review. They are warning that record inflation is going to be a problem for banks. It's going to be a problem for governments, that lenders may need bigger provisions amid this worsening outlook. Some of the other lines I want to walk you through here, they're saying that the price squeeze is hurting people's ability to service debts. Again, that goes to the issue of inflation that they're flagging. The real estate markets, one of the positives here, say they might be at a turning point, but rate hikes are weighing more heavily on public finances. They're also warning here, Francine, about asset prices, saying that they still appear stretched despite the drops that we have seen. Here's what DeGuindos said, the ECB vice president, in this release. Our assessment is that risks to financial stability have increased, while a technical recession in the euro area has become more lively. So, Francine, these are absolutely big picture macro risks from inflation, the issue with debt, and potentially asset prices that the ECB is flagging here.
Yeah, leverage is the main concern. If you go to 1% to potentially 5% interest rates, that's going to cause a lot of turmoil. Now, Domes, thank you, Danny. Domes, our interview with the ECB Vice President. He's Luis de Guindos, and that's at 12 p.m. London time. Now, we'll have plenty more, of course, from here throughout the day. The big story is, of course, that rocket launch that killed 2 farmers in Poland. Initial assessments by the U.S. now indicate a rocket that hit the Polish village was fired by Ukrainian forces at an incoming Russian one. That's according to a report by the Associated Press, citing 3 U.S. officials. Now, G7 leaders who were gathered in Bali for the G20 summit held an emergency meeting on the strike, which came during a wave of Russian rocket attacks on Ukraine. Now, let's bring in Bloomberg's Piotr Skomilovsky in Warsaw and Anne-Marie Hordern at the G20 summit in Bali. So, Piotr, what do we know so far about the strike? Who's talking about this being, and we know that actually both sides a lot of times use Russian missiles, because it could very well be the Ukrainian side trying to defend themselves.
Good morning. Indeed, the situation has really changed over the course of the last 12 hours. Initially, we obviously heard that this might have been stray missiles coming from Russia. At this point, what the Polish side has been saying or telling us is that the explosion took place in Przewodów, which is a small town about 4 miles away from the Ukrainian border on the Polish side, obviously, so inside NATO. 2 people are killed, farm workers. What the way Polish side is describing this is that it's the Russian-produced missile that hit the place. Now, we also heard from one of the ministers, junior ministers, on TV this morning, saying that actually Ukraine is also in the possession of this type of missile. So it's hard to say at this point who exactly fired. But judging from what we're hearing from different officials, it seems like the panic in terms of this potentially being Russia has eased a bit in that sense. At the same time, in Brussels, NATO ambassadors are meeting right now, and Poland is still weighing its options. It's trying to it raised a possibility that it might actually trigger the so-called Article 4 of the NATO treaty, so the consultations. But whether it's going to do this, we'll only find out once the meeting starts and once we get some kind of communication from them.
Yeah, so the investigation is still ongoing, and we know that the NATO ambassadors are meeting as we speak. Anne-Marie, the timing of this at first sent shockwaves also because it seemed yesterday at the G20 that Russia was more and more isolated, even maybe losing, or if we don't go as far as saying losing, certainly having less support from China and India.
Yes, certainly. And what we've seen, Francine, from the communique coming out of the G20 is that, quote, most countries condemn the war and Russia's actions, and not just what it means on the humanitarian front and obviously the lives of civilians in Ukraine, but also the impact on the global economy. And then we saw a hastily put together emergency meeting. President Biden was joined by leaders of other G7 countries as well as NATO countries, Europe, France, Italy, Canada, and the likes. And what President Biden said after the meeting is that he says the preliminary information contests that it was fired from Russia. He says we have to wait and see, though. He wants to complete the investigation. And just speaking here now, Olaf Scholz of Germany is reiterating that, saying it would be irresponsible to decide what actually happened until the investigation is complete. But Olaf Scholz also said, and this is also critical, and this really echoes what President Biden and other leaders have been saying on the sidelines of the G20, that there would be no incident on the border of Ukraine and Poland if there was not for Putin's invasion of Ukraine.
Yeah, and Anne-Marie, I know you've spoken to the NATO Secretary General several times over the last couple of months. He has always said that no matter what happens, if something happens at the border, we need to keep the channel of communication with the Russian military open. Is there still an understanding that NATO will try to do whatever it takes not to get involved?
Well, President Biden spoke to his counterpart in Poland today, Andrzej Duda, and he said that his commitment to NATO is ironclad. We have the envoys now speaking at NATO, and really it's a wait-and-see moment. What we heard from Poland last night, Francine, is that they were likely to trigger Article 4, which would be a meeting, a consensus meeting, so they can gather the information and decide what to do next. This would come before the more serious triggering of Article 5. But really, the entire worry from the West at the start of this invasion on February 24th was that this could potentially spread beyond Ukraine's borders. And that is a concern that obviously what happened overnight is really on the forefront in the minds. But we should really note that leaders are trying to invoke calm, and they do not want to make any judgments whatsoever until they have this investigation complete.
Yeah, and Piotr, going back to Anne-Marie's, very true point, is that, again, this is 6 kilometers from the border, and it's not it's maybe the first time that we saw a missile actually on foreign territory, but I think there was a 6,000-ton unmanned drone then ended up in a neighboring country in March.
Indeed, yes. So it's obviously a bit of a change in that sense that we're talking about missiles here. So it's raised a lot of concerns in Poland. Obviously, what surprised us and what surprised a lot of people is that how cautious Polish side has always been since the news broke in not trying to apportion blame here right from the start. Poland has been a very staunch supporter of Ukraine right from the start of the conflict, and they've been very easy to go after Russia and push for a very tough line on sanctions, on going after the Putin regime. So it was interesting to see that they didn't want to amplify the situation. And right now the investigation is ongoing. We are going to hear a bit more once the meeting of National Security Council is going to happen at midday here, and probably a bit more from the investigation itself. At this point, foreign experts are involved. It's all coordinated with NATO, and we're going to see how this is going to figure, develop in the coming hours.
Yeah. All right, thank you both for joining us, Piotr and Anne-Marie there. Anne-Marie Hordern at the G20 summit in Bali, and Bloomberg's Piotr Skolimowski in Warsaw. Now, we'll have plenty more throughout the day, of course, on what happened overnight. Staying with that story, Ukraine's ambassador to Singapore also spoke to us earlier about the need to establish the facts. Take a listen.
We need to wait till the investigation is over to see what is the outcome of it. We in Ukraine have faced so many attempts by Russia to hide the facts, to go through its normal modus operandi when they deny their involvement, when they blame the victim, and when they move away from the perpetrator side.
Ukraine's ambassador to Singapore, Katerina Zelenko, speaking to Bloomberg TV there at the New Economy Forum here. Now, coming up, an interview you don't want to miss. That is the president of Ukraine. We'll hear directly from him tomorrow, Volodymyr Zelensky, when he joins the Bloomberg New Economy Forum. That's Thursday afternoon in Asia, Thursday morning in Europe. Coming up, we'll be talking geopolitical tensions, energy security, and all things Europe with Agnes Balash, Chief European Strategist at Barings. That's coming up shortly, and this is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window. They have thorns on them.
The top names in climate change are on Bloomberg.
Building out
local wind, local solar, hydrogen. These are solutions to not just climate issues, but geopolitical issues.
We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Singapore. Now let's get back to the markets. We did see UK inflation rising more than expected in October to a 41-year high of 11.1%, adding pressure to the Bank of England to raise interest rates again. Now let's talk about central banks and, of course, some of the pressures that we're also seeing in currencies across the world. We're joined now by Agnes Belais, Chief European Strategist at Barings. Agnes, as always, thank you so much for joining us. How much do you worry about the UK economy going forward and what we could expect from the Chancellor tomorrow?
Good morning, Francine. So before this inflation release, which is higher than expected, even higher than the Bank of England's forecast, there was some hope that the fiscal discipline that is expected to be announced by Chancellor Hunt tomorrow would provide some respite to the Bank of England, so that it is fighting this very delicate rising inflation in the midst of a recession that has already started in the UK. But the fact that inflation keeps rising, keeps passing through to core goods and services, and that food prices was so high in this morning's release for October, means that the ECB will just have to keep going on a little bit, no matter what, how tight the fiscal package of consolidation that Jeremy Hunt is going to announce tomorrow.
So, Agnes, overall, is there a danger that actually interest rates have to rise so high? And I don't know whether you think we've reached peak inflation in the UK or in Europe, but that interest rates will have to be put up so aggressively that there will be a significant downturn, not the kind of downturn that we're expecting now for economies.
So this thing with the UK that's a little bit different with the euro area and the US is that there's 3 shocks instead of 2. There's Brexit, there's the pandemic, and then there's the war. And the problem is that Brexit by itself reduced the labor force in the UK. It actually halved population due to immigration, and the labor force participation fell 1 percentage point as a result of the pandemic. There are long-term illness, and there's also early retirements that have participated to this reduction in the labor force. As a result of that, UK wages have actually increased 50% more in the UK than in the euro area, for example. And therefore, the pressures on inflation are multiple. And it's quite likely that the Bank of England, is far from having peaked, and will just have to go steady, but for longer than maybe potentially in the US or in the euro area.
Agnes, why is it so much harder for the UK and actually for inflation in the UK? Is it the composition? Is it, the type labor market that was also exacerbated by Brexit?
Yeah, exactly. So this Brexit created a labor market tightness that is increasing wages. And we know that when wages increase, they allow inflation to pass through more easily, simply because the purchasing power is maintained higher for longer. And this is not what is happening in the euro area. And therefore, these lower labor force participation creating shortages on the labor market, and therefore higher wages, particularly at the lower end of the pay scale, which is much broader in terms of quantity, makes the pass-through of inflation to prices in the future more permanent. And therefore, fighting that means the ECB has to reduce, the Bank of England has to reduce demand and not just fight inflation expectations from the supply side and energy and food price increases.
Agnes, are we going to start importing inflation from China when they reopen?
Yeah, so that is the big question. That's actually really a positive question. If China finally manages to reopen, that should be a good news, not only for China, but for the world. And this question of inflation is nagging, of course. We want China to be dynamic, to be vibrant, to start importing again. But the thing is, how will China reopen without sufficient vaccinations? I was going to say as much vaccinations as in the rest of the world, but just sufficient vaccinations to make the elderly population safe to this reopening. So in my mind, it's likely that the reopening is really slow and gradual. So we've seen the Chinese government announce a number of measures that
Oh, I think we've just lost Agnes, actually. Some of the satellite connections, sometimes it happens. We'll get back to Agnes to have a full roundup of some of the things, the benefits, if, of course, China reopens, but also some of the concerns, for example, because of the use of energy prices, which could push up the price of oil even more. Agnes Belleche, Chief European Strategist at Barings. Now, we'll have plenty more on the inflation picture across the world. Also coming up, the US and the EU urge caution as investors, or as investigations into the origin of the rocket strike on Poland continues. So stay with us for reaction from Brussels. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
FTX is one of these absolute travesties in the history of financial markets. I mean,
People will lose billions of dollars collectively.
People are going to lose billions of dollars. And that undermines trust in all financial markets.
What should the industry do to survive and make itself better
My opinion is more collaboration.
Asset under management in the FTX is large, so it may actually hit the other bankruptcy. In morning, there's actually one new report that BlockFi is a lending platform may actually file the bankruptcy, so it may actually continue a little bit.
I think it's quite contained right now, and the broader market is still seeing a lot of liquidity, and the authorities, I think, will be there to address any issues in crypto.
Well, attendees of the Bloomberg New Economy Forum in Singapore speaking there on the rapid downfall of crypto exchange FTX. Now, the fallout of the collapse has seen crypto's total market cap fall below $1 trillion. Now, let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Donald Trump has formally entered the 2024 U.S. presidential race. Minutes before announcing his candidacy at Mar-a-Lago, Trump's campaign filed federal paperwork to confirm that he is running again. Candidates endorsed by Trump floundered in key races in last week's midterm elections, prompting calls for some Republicans for the party to move on.
In order to make America great and glorious again, I am tonight announcing my candidacy for President of the United States.
NASA has launched its most powerful rocket in 50 years, sending an uncrewed capsule skyward on a 25-day mission to orbit the moon and return safely to Earth. The mission, called Artemis 1, marks the inaugural flight of both the SLS rocket and the Orion crew capsule. It kicks off NASA's multi-mission Artemis program, which is focused on sending astronauts, including the first woman and the first person of color, back to the moon's surface by as early as 2025. Sources say Russia is expected to agree to extend a UN-brokered deal allowing exports of Ukrainian grain from the Black Sea. Meanwhile, speaking at the Bloomberg New Economy Forum, the Cargill CEO says food prices will probably decline next year, even as global crop stockpiles stay very tight. The boss of America's largest private company says crop demand can be met with higher output. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Laura Wright there with your top news. Now, coming up, we go back to our top story, the U.S. and the EU urging caution as investigations into the origin of the rocket strike on Poland continue. We'll be live in Brussels. Now, a reminder, the attack killed 2 people at a village about 6 kilometers from the frontier with Ukraine. It did come as tensions were escalating. They were certainly high with Russia over its February invasion of Ukraine. We understand in the past 24 hours that Moscow had fired missile barrages at Ukrainian infrastructure earlier in the day, causing energy outages across the country. We now understand that this one missile that could have triggered Article 4 and then Article 5 and then forced all of the nations of NATO to engage in conflict could now come from the Ukrainian side. This is what we've been told on the ground here in Singapore with many security experts, is that actually both sides, both the Russians and the Ukrainians, sometimes use Russian-made missiles. This is Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has
is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Fears of escalation. AP reports a rocket that hit a Polish village was probably fired by Ukrainian forces at an incoming Russian missile. Meanwhile, a barrage of missiles target Kyiv and other locations across the country, knocking out power for 7 million households. President Biden calls the attacks merciless. Plus, UK inflation hits a 41-year high as soaring energy prices add to pressure on the Bank of England and the government. So good morning, good afternoon. Welcome to Bloomberg Surveillance Early Edition, everyone. I'm Francine Lacqua here in Singapore for the Bloomberg New Economy Forum. Now, U.S. President Joe Biden and European leaders are urging caution after a rocket struck a Polish village and killed 2 people just over the border from Ukraine. Now, for more, we're joined by Bloomberg's Natalia Drozdiak. Natalia, thank you for joining us. So what do we know so far? I know it's a very fluid, conversation. I know that there's still an investigation underground. What caused this, and how is NATO reacting?
Yes, as you said, Francine, we're still waiting on more information, but we're getting some bits and pieces trickling in. U.S. President Joe Biden said last night there was information that suggested the missile had not been sent from Russia. Some officials are suggesting that it could have been Ukraine's missile defense sending that projectile off course. These questions are still open, but we'll know more after a meeting of the NATO ambassadors that's ongoing at the moment, where they're discussing this issue. And NATO Secretary General Jens Stoltenberg will brief the press around 12:30 Brussels time.
Okay, Natalia, thank you so much, of course, for the update. And we now, keep on top of the official response, really, to see exactly what was happening. We have always, on this channel, urged caution before jumping to conclusions. Our Natalia Drozdiak there from our Brussels bureau. Now, we're also joined to talk about the markets, but also the frontier of geopolitics and some of the risks out there, which are many, by Axel Weber. He's the former chairman of UBS and chair of the Institute of International Finance. It's been a long day. I can't even talk, Axel, anymore.
Right.
Thank you so much
for
joining us. Look, there's a lot going on in the world. We talk about leverage. We talk about, how you deploy capital. We talk about geopolitics and crypto. Right now, what do you worry about the most for our global economy?
I think what we saw over the G20 meetings recently has taken some of my biggest fears away, that we would see a continued escalation of the conflict between China and the United States. That is, in my view, one of the most dominant factors for the global economy. You cannot run the global economy without China, and it's good that the US and China are trying to work together more. Being here in the region in Singapore, as we both are today, it's of vital importance that the region here continues to be part of the global economy and continues to integrate in the global economy. I would say the tailwinds for globalization from the last 20 years has been largely driven by China being integrated into the global economy. And if that were to change, you would see massive headwinds for the global economy.
It just feels like it's a bit hot and cold. I know yesterday they really tried to de-escalate when we heard, for the first time, a face-to-face meeting between the two presidents. But is this about global supremacy? Is this about who comes on top in terms of the economic superpower? So are we still going to see this intense competition?
No, I think, and most of the investors here at the Bloomberg meeting will tell you that China is a massive opportunity for most of the Western companies, and it will continue to be an opportunity in the future. There have been, conflicts. I mean, when President Trump tried to take China a bit out of the trade, international trade, many of the European countries didn't follow that path. And Europe continues to be very dependent on good relations with the Americas and good relations with China and the Asian Pacific region. We live in a global economy, and if we were to see any setback of globalization, and China is the major new factor in the global economy over the last 20 years, we would see much less prosperity, and much less prosperity in the weakest and in the least developed regions of this world. So I think it is mandatory that US leaders and Chinese leaders put all these geopolitics aside and really look at what is good at this stage of the global economy, where we're just coming out of a pandemic. We've had major challenges after the financial crisis to really try and work together for a better global economy. That's what we need.
You left UBS about 6 months ago, just over 6 months ago, and I know you have never really been a believer in crypto. How should a big global bank now look at cryptocurrencies after the implosion of FTX?
Well, so what we always offered was if banks wanted to offer services to their clients on crypto, we allowed them and we helped them get that done, international linkages, etc. But we never looked at crypto as something that would be an asset universe that we would invest in or recommend investors to invest in. So we've been pretty hands-off in looking at crypto as an asset class that we want to help develop. And actually, some of the problems are the same as they showed up here with the problems we saw over the last couple of days. Is what is the intrinsic value of a digital asset that is being created, unless it is actually a securitization of a physical asset that is done in digital form? And so I think cryptocurrencies have two big problems. The first one is crypto means you hide the identity very often of the people involved in the transaction. That is something that banks cannot be involved in. Actually, transparency and beneficial owner is very key.
But what about institutional investors? So again, it's very difficult. If you're a client, and I imagine clients would come up to you and say, like, why can we not make more money in the crypto space? Right. And what did we live through in the last 3 days? Are we talking about fraud, or is it just the intrinsic value of what we're trading?
I haven't followed it that closely to be able to pass a judgment of whether it was fraud or anything. You really need to be in the weeds on this. But a sure sign is that the institutions, that do financial supervision are opening an investigation. So this will be looked into. But I do think the general problem that we have is many of these cryptocurrencies live of the expectation of a continued growth over time. And that's what creates the price dynamics. And we've seen the ability of cryptocurrencies to be a stable investment. We've seen that pretty much undermined over the last couple of years. So yes, there is an upside that many investors take. You invest when it's low and you try and sell it when it's high. But that's a very hard point to have. But in general, the value preservation of cryptocurrencies has been really not showing a great record because of its volatility. And then, the other point is really it isn't an internationally recognized means of payments. It's very hard to move from crypto into real currencies. And so you are invested in an asset class that has no real equivalent to it. And finality of payment is not necessarily ensured by many cryptocurrencies either. So there are some problems with the construction. Central banks are trying to move into digital currencies. And I think that will be a much more stable construct because it will replace analog money with more digital money, which now really matches payment patterns of many of the consumers. But crypto, I'm still skeptical of the entire construction.
So, Axel, there are two big banks in Switzerland. You spent most of your lifetime trying to beat your competitor, Credit Suisse. What's happening at Credit Suisse? What will happen to this bank, given all of the turmoil and travails we've been reporting on?
Well, so one thing I can say is, yes, we have, I think, over the years, really established a relatively good brand in UBS, and I was glad to be part of this 10-year transformation. And of course, by comparison, whether you compare it to other competitors or to Credit Suisse, we've been doing well both on an absolute scale and a relative scale. I know most of the current management and chair of Credit Suisse. They're really focused on getting things done, and they've been part of the UBS turnaround story. Both the new CEO, Uli Kerner, he's a very structured, very organized person that knows strategy, has been implementing good strategies at UBS in the asset management, and so I think he will focus on taking the risk down in the bank, which is badly needed. And Axel Lehmann has, both have been operating officers. They know the intrinsic working of a bank at UBS, and so I think they will get the efficiency of the bank going. Where I do see a risk was that basically I think the risk culture, which is very hard to really foster, that the risk culture has somewhat deteriorated at Credit Suisse. We always try to hold our risk culture up. We had very elaborated processes around managing risk and understanding risk. And I think if you go through a period like they have, you need to put risk culture and risk focus back at the core of the bank. And I think the individuals that are there now and the executives, they will do that. They know that risk culture matters.
But could we see the two banks merge?
I think that is pretty unlikely because, we had discussions in the past about consolidation in the European banking industry. Really, the issue at the moment is unless there is a limit and unless there is a clear understanding of the downside risks in Credit Suisse, you will have a very hard time for any international competitor, including Swiss competitors, to think about a merger, because their shareholders will really want to see that this bank is on an improving trajectory. And so I do think that Credit Suisse has raised capital. They actually have their shareholders behind them, and they have everything they need to come out of this difficult period. It will be an upward battle. And when I joined UBS, I started saying, look, this has been an icon of Switzerland. It needs to be rebuilt. But I also said it will take 10 years. But this is not a quick fix. This will take time.
Do they have 10 years?
Well, I'm not sure they have 10 years, but I do think that they shouldn't look for quick wins. They really need to restructure the bank. And when we made our announcement, actually the markets initially were skeptical that you could focus away from from investment banking onto wealth management. The other Swiss bank has pretty much the same core of a wealth manager, but their investment bank is way larger and way more active in markets, and therefore their overall results depend a lot more on the volatility of markets through the investment bank. They need to trim that back, and that is a process that will take some time. But I think, having seen and done it at UBS, it's something that will work because the core of Swiss banks around wealth management is really an internationally intact business.
Okay, Axel, as always, thank you so much for your time. Axel Weber there, the former chairman of UBS and chair of the Institute of International Finance. Now, we'll have plenty more, of course, throughout the day. Also get the latest on the situation in Poland and the war in Ukraine. We speak to Tony Brenton, the UK's former ambassador to Russia, next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in Singapore at our Bloomberg New Economy Forum. Now, initial assessments by the U.S. indicate that a rocket that hit a Polish village was actually fired by Ukrainian forces at an incoming Russian missile. Now, that's according to a report by the Associated Press citing 3 U.S. officials. Now, G7 leaders gathered in Bali for the G20 summit, held an emergency meeting on the strike. We're now joined by Sir Tony Brenton. He's a fellow of Cambridge University, former British ambassador to Russia. Ambassador, thank you for joining us. What do we know, so far about this hike? There was a lot of concern that this would have been a Russian strike because Vladimir Putin is also internationally increasingly isolated.
Yeah, no, I mean, there was initially a lot of fear that this was a Russian strike because a lot of Russian rockets were flying around in any case, all of them aimed at Ukraine. And if it had been a Russian strike, whether accidental or deliberate, that then raised the question of whether NATO could be moving towards war with Russia. I mean, NATO, under its Article 5 of its charter, everybody's committed to defending everyone else. If the Poles had asked for that defense, then it would have been at the very least embarrassing for other members of NATO to say no. Now, mercifully, it looks increasingly as if it wasn't a Russian strike, and so people who said some pretty aggressive things early on are beginning to modify their words slightly. I think the important lesson from this is actually how escalation could come out of an accident at any time connected to this war, and therefore the consequence of what has just happened may be to encourage people to think more in terms of getting the Ukrainians and the Russians talking to each other with a view to beginning to end hostilities.
But Ambassador, you understand Russia more than most people, full stop. How is Russia's war in Ukraine changing? We saw yesterday strikes, so less troop combats, but really quite aggressive strikes, for example, to take down Ukrainian infrastructure.
Yeah, I mean, Russia's abandoned, it has not been able to achieve its original objectives, which was in effect to make Ukraine a colony again of Russia. They've lost very badly on the battlefield. They've been forced to reduce their objectives steadily. They're now in a position where they're doing 2 things effectively. First of all, they're pulling in their defensive lines, hence the fact that they pulled out of Kherson last week, to a more defensible area that they can defend. And secondly, in order partly to justify this to the real hardliners back in Russia, but also with a vague hope that it may encourage the Ukrainians, at least to the negotiating table, they've launched this series of waves of attacks on Ukrainian civilian infrastructure, which is exactly what we saw again yesterday. Now, I think the first part of this, which is, as I say, to withdraw to defensible lines and hopefully sit out the winter in the hope that things will have improved for them militarily by next spring, at least puts a pause on things, although how successful it's going to be in view of huge Ukrainian success on the battlefield in the past remains to be seen. The other half, which is attacking Ukrainian civilian infrastructure, the history of London during the Blitz, for example, is that those sorts of attacks tend to strengthen civilian resistance rather than weaken them.
Does this latest, I guess, fear that we had over the last 24 hours, even if it is a Ukrainian missile that was trying to intercept a Russian one, change the support that the West gives to Ukraine? Are we going to see more anti-missile, help and weapons being sent?
Well, what it doesn't do, I mean, if it had been a Russian missile, there would have undoubtedly been very strong calls for yet more Western support for Ukraine. It's turned out not to be the case. Nevertheless, the Ukrainians can claim that the accident that happened was caused by the Russian assault, and therefore there is a case for more Western help, and that argument may have some weight. But as I say, I think the real impact of all of this is that it's a reminder of how dangerous this war is. It doesn't take any more than a rather small accident to raise a serious fear that not just Ukraine, but all of NATO is going to be at war with Russia, with all sorts of really quite scary implications for escalation in the future. And therefore, as I say, I hope that one of the consequences of this will be that people think more actively about moving towards negotiating an end to the war.
Ambassador, very quickly, what's the way out of this? How does this be escalated permanently? Do we need to, like some people say, give Vladimir Putin an out?
There's no easy way out, and there's no appetite to give Vladimir Putin an easy way out. The Ukrainians at the moment believe rightly that they're winning the war and have set some really very demanding objectives like Russian reparations, Russian war trials, Russian withdrawal from all of Ukraine, which the Russians are simply not going to be ready to meet. So the prospects for negotiations at the moment are actually very limited. It remains to be seen actually what happens over the next 2 or 3 months. If the Russians do effect a pause, if things do, as it were, bog down, and it looks as if we're in a long-term stalemate, then there begins to be hope for negotiations. But I'm afraid we're still some way from that at the moment.
Ambassador, thank you so much. Sir Tony Brenton, they're a fellow of Cambridge University and former British ambassador to Russia, joining us, of course, on the latest 24 hours. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Authorities in the US and the Bahamas are said to be discussing the possibility of bringing Sam Bankman-Fried to America for questioning over the collapse of crypto firm FTX. Bankman-Fried has tweeted that he would meet regulators in person and that he believed FTX US had enough money to repay customers. Apple is said to be preparing to begin sourcing chips from a plant under construction in Arizona, marking a major step toward reducing the company's reliance on Asia. Bloomberg learned that CEO Tim Cook made the comments at an internal meeting in Germany. He added that Apple may also expand its supply to include chips from plants in Europe. Bloomberg's been told that Goldman Sachs paid over $12 million to a veteran executive who complained internally about a toxic workplace for women. Sources say the bank settled with the departing partner 2 years ago in a deal that kept secret her detailed account of senior executives making vulgar and dismissive comments about women. Goldman says it disputes the report and that it contains factual errors. That's the Bloomberg Business Flash, Francine.
Thank you so much, Laura. Now, coming up, UK Chancellor Jeremy Hunt is sent to confirm he's lifting the cap on bankers' bonuses when he delivers his autumn statement tomorrow. We'll have plenty more on that. Plus, UK CPI at a 41-year high. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity.
We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in Singapore. So, UK inflation rose more than expected in October to a 41-year high of 11.1%, adding pressure, of course, on the Bank of England to raise interest rates again, as well as on Prime Minister Rishi Sunak's government.
We're facing these global economic shocks. We are going to have to take some difficult decisions at home to protect ourselves against those, and to start getting a grip of inflation, reducing it, and limiting the increase in mortgage rates.
Well, joining us now is Bloomberg's John Stepek. John, you fabulous, a readout that you have, of course, a management, you have a newsletter on wealth. What does this mean for how people will fear their wealth evaporate in the UK?
Well, I mean, it's pretty grim, to be honest, Francine. So on the one hand, you've got inflation rising, and it's rising above wages, so people's wages aren't keeping up with inflation. And then we've also got the autumn statement coming up tomorrow. And although the Chancellor has released an awful lot of different suggestions about how he might raise money, one thing we can almost guarantee is that the majority of it will come through fiscal drag. So fiscal drag is basically where you freeze the thresholds for various kind of tax, for income tax, the pensions lifetime allowance, inheritance tax, and that'll drag more people in to becoming higher rate taxpayers and also into tax bands and liable to taxes they haven't had to pay before. So, yeah, on balance, I hate to say it, but it's not going to be good for the majority of us, which I suppose is what Jeremy Hunt has been trying to warn everyone for the last fortnight.
Yeah, and so, of course, all eyes on the fiscal statement tomorrow. What are you expecting there? And again, you're looking at it through the lens of wealth and people trying to protect their wealth.
Yeah, well, as I say, I think the main thing to be looking out for is fiscal drag. And this is where, so more people are going to be paying higher rates of income tax. More people are going to find that they might end up being liable to the pensions lifetime allowance. And that means that, there aren't that many things that you can do to protect yourself from this. But the best thing to do is to be aware of where you are personally with your personal finances, and then look at ways that you might combat this. Making more pension contributions, for example.
Yeah. John, thank you so much. John Stepek there with a renewed effort here at Bloomberg. I think he has a newsletter called Money Distilled. Tomorrow, our special coverage of the UK autumn statement. This is Bloomberg.
invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at the 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and will continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Hitting missiles on NATO territory? This is a Russian missile attack on collective security. This is a very significant escalation.
It's highly unlikely that Russia intended to attack Poland with 2 stray rockets. But there needs to be accountability for what happened.
We stand with people of Poland. We know how it is. And of course, we are ready to support our partners and friends in this situation.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. President Biden and key European leaders urge caution after a rocket hit a village in Poland. Uncertainty remains over who fired it and from where. NATO ambassadors meet today. It's official, Donald Trump is running for president again. His announcement comes as some Republicans are saying it's time for the former president to move on. Inflation hasn't been this high in the UK since 1981. The latest numbers show the consumer price index up more than 11% in the last year. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, risk assets certainly under pressure yesterday after we saw that rocket fall in Poland. Still a lot of questions as to who exactly fired it, from where, and all the details surrounding that. We wait for those. Some fairly measured language from Western leaders helping to diffuse some of the risk aversion.
Yeah, I think, Anna, at this point, there's still a lot that we don't know or don't have confirmed. So markets definitely reacting hesitantly around all this news flow. But the geopolitical risk question mark did create somewhat of a drag on risk sentiment in the Asian session overnight. The MSCI Asia Pacific Index as a whole down about 0.3%. So no major losses, but still not a lot of people seem to have conviction to buy in the overnight session. Now, one stock that did buck the general downtrend, Tencent, it rose 2% during the trading day, but after the close in Asia is when it reported its results. Revenue missed expectations, but the other big headline is it's giving away almost its entire Meituan stake. So that may be part of an attempt to ease regulatory concerns from Beijing about this company having a bit too much power and influence. So we'll see how those shares react once they reopen again tomorrow. Then in foreign exchange, of course, geopolitical risk is really dragging on a lot of Asian currencies, most of them weakening against the U.S. dollar. One of the big underperformers is the South Korean won, weaker by about 0.6% to the 13.25 level. And what's interesting is the Japanese yen not really getting a haven bid today. The dollar actually stronger fractionally against the yen. Right now, dollar yen trading at 139.44, Matt.
I'll be watching that closely. The dollar obviously very key to the market story. It has come down a little bit after the gain yesterday amid geopolitical tensions. Right now we see S&P futures rising about 0.2%. We closed up at 39.91 yesterday, so just short of that 4,000 mark. Could we break through it today? It looks very likely that we do in the intraday. Can we close above 4,000? That's another matter. The Bloomberg U.S. Dollar Index is right now down just about 0.2% at 1271.88. Still a long way off the 1350, 1360 levels that we'd seen at the high just about a month ago. And the U.S. 10-year yield is currently rising about 3 basis points. That's a little bit of a headwind to equities right now. 380.01, though, still well short of the 420, 425 levels that we saw at the peak in this cycle. Bitcoin right now is down about 1%, but still at the same level that we saw it yesterday at this time, $16,726, as geopolitical tensions really take up the space in the news cycle that FTX had occupied over the last week. Anna, what do you see in terms of Europe?
Yeah, well, the geopolitical situation weighing on Europe today then, Matt, we do see European stocks under a little bit of pressure this morning, although perhaps that sell-off moderated a little by some of the very cautious language, as I mentioned, from some of the Western leaders. But certainly Eastern European markets coming under some pressure. The reality of being so geographically close to a war zone, not lost on anybody overnight. The London market holding up a little better. Some of the moves higher in the oil price, helping to support some oil majors, and that is to the benefit of the London market. Let's have a look at some of the other assets in focus today. This is the auto sector, down by just over 3%. Mercedes in Germany, one of those on the back foot, although Volvo Cars also weaker. Mercedes cutting the price of its EV cars over in the Chinese market is one thing to focus on. Siemens Energy, in fact, was the company I was going to talk about. So we'll note that Siemens is also down by 0.8% in Germany. This is the US dollar against the Polish zloty. Now, yesterday, as we got news break, of course, of this rocket falling in Poland, we did see risk aversion, of course, across a host of assets. We saw the Polish zloty selling off against the euro. We saw the euro sell off against the US dollar. But some of that has unwound. And in the case of the Polish zloty, actually against the euro, it's back to where it was before this news flow broke. And so we'll get an update from Poland in a moment as to what we know and what we don't about what happened. But that is where the market is right now, even if Polish stocks are still under pressure. The euro against the US dollar making its way back up, and in fact has gone over now the 104 mark, as the euro tries to move through this story and tries to focus instead on what was driving it before, and that was some of the interest rate differential expectations with the weaker inflation picture in the United States, Matt.
Let's get back, though, to the geopolitical story. President Biden and key European leaders are urging caution after a rocket struck a village in Poland just over the border from Ukraine. Doubts are growing over whether Russia was directly to blame. Some have suggested it could have been a Russian missile, but one that was knocked off course by a Ukrainian missile defense system. 2 people were killed in the explosion. We've got our team coverage for you. Joining us now is Bloomberg's Piotr Skolomowski in Warsaw, Maria Tadeo in Brussels outside the EU Commission, and Anne-Marie Hordern in Bali, where the G20 is was held. Let's start with Piotr in Warsaw. First off, do we think that Poland is going to trigger Article 4 in the NATO treaty today? That would mean that all of the allies get together and, I guess, decide whether or not to trigger Article 5, which is a more aggressive defense clause.
Indeed, hi, man. So the situation is that at this point, it looks increasingly unlikely, or very unlikely, that Poland will trigger Article 4, which would obviously trigger consultation before any response from NATO. The reason is that it looks also unlikely, and we've just seen headlines crossing our terminals that Biden told allies that Polish blast was caused by Ukraine air defense. So, starting from the report that we got, some unconfirmed report early yesterday after the event was disclosed,
that it might have been 2 Russian missiles. What we're hearing now is actually it's just a Russian-made missile, and it hit a town just near the border in Poland, the town called Przewodów, which is just 4 miles away from the border with Ukraine. And it obviously, it killed 2 people on the spot. It hit a farm. So at this point, what we're looking at is probably less severe in case of geopolitical consequences than what we might have feared yesterday when the news first broke.
All right, Bloomberg's Piotr Skolomowski in Warsaw, thank you so much. And just to recap those headlines that Piotr was mentioning, Biden told allies that the Polish blast was caused by Ukraine's air defense. He made those remarks to G7 and NATO allies, described by officials. So, of course, European countries are weighing this incident as well. We heard from Latvia's defense minister here on Bloomberg television yesterday. He said his country will support Poland if they need it.
The next steps, in my view, if this is fully confirmed, should be a much more serious discussion about air defense systems and, in my view, closing at least part of the Ukrainian sky, because we cannot afford another crime against civilians.
Bloomberg's Maria Tadeo is joining us now outside the EU Commission. So, Maria, given the headlines we are getting from Biden, the idea now that it is perhaps Ukraine air defense that is what caused ultimately the deaths of these 2 people, what's the read from Brussels on how to proceed from here?
Well, Kaylee, this is a fast-moving situation. Of course, it is a very serious situation, so everyone here is very cautious. But this morning, there is some relief compared to last night, where there was a real sense of panic that kicked in for a few hours, precisely as you say, because made in Russia perhaps does not mean that it was directly fired by Russia. Also, the words from President Biden, which I'm sure Anne-Marie will now get into detail, providing some relief today when it comes to the European side of the story. Of course, we are waiting to hear from the Secretary General of NATO. NATO is based in Brussels. In fact, I believe there will be a press conference in about an hour, 30 minutes. The Secretary General of NATO saying all of the facts will have to be established and made clear. We know he is in communications with the Polish government. But overall, Kaylee, I think today also the situation, an eye-opener, a reminder for Europeans that this war is not happening somewhere far in the world. This is happening in the heart of Europe. The risks are many, and for Eastern Europeans also perhaps validation that they are geographically in a vulnerable situation.
All right, Maria, thanks very much. Obviously, we're all being very cautious with this situation. We appreciate your caution as well, Maria Tadeo, outside the EU Commission. Let's get over to Bali right now. G20 leaders have been gathered there for the G20 summit. President Biden says it's unlikely the rocket which struck inside Poland's border was fired from Russia.
Mr. President, is it too early to say whether this missile was fired from Russia?
There is preliminary information that contests that. I don't want to say that till we completely investigate, but it is. It's unlikely in the minds of the trajectory that it was fired from Russia, but we'll see.
All right, so there are a lot of questions still to be answered. From whence was the missile fired? Who made the missile? Who actually fired it? And, you know, what caused the explosion? Anne-Marie Horton there in Bali. We're just learning that officials say the blast was likely caused by Ukrainian air defense systems. Now, we don't know if that means the air defense system knocked a Russian-fired missile off course or if the Ukrainian air defense system was actually the missile that landed in Poland. Nonetheless, it's a serious situation that's put the world on edge, Anne-Marie.
It certainly is a serious situation that put the world on edge and the G20 summit on edge, which is why you saw
Early this morning, President was woken up to speak with President Duda of Poland, and then he gathered with the G7 leaders and NATO leaders and then addressed the press. And what you hear from the president, echoed by other leaders like Chancellor Olaf Scholz, who recently was just wrapping up a speech here at the G20, is that they want to remain cautious until the investigation is complete. And they say it would be irresponsible to point fingers right now, given how heightened the concerns is around this. But we should also note there's another point that leaders are talking about, and it is the fact that we would not be talking about the fact of what missile it was, where was it fired from, and the trajectory of that rocket and how it got on the border of Poland and Ukraine if it wasn't for Putin's war in Ukraine.
All right, Bloomberg's Anne-Marie Horton reporting from the G20 in Bali. Thank you so much. Meanwhile, in U.S. domestic political news, former President Donald Trump has formally entered the 2024 presidential race here in the U.S. He announced his candidacy at Mar-a-Lago last night.
In order to make America great and glorious again, I am tonight announcing my candidacy for President of the United States.
And he went on to say in those remarks, Anna, that we will immediately tackle inflation and bring it down to a level where it was. Remember, economic security is national security. So like we saw in the midterms, the economy really being front and center here in the U.S. And of course, that's a global story, Anna.
Yeah, it is a global story. Picking up on the UK side of that, soaring energy prices helped drive inflation even higher than expected in the month of October. The consumer price index rose over 11% from a year ago. Lizzie Burden, Bloomberg UK correspondent, joins us now to break down the inflation data. Lizzie, good morning. So energy prices clearly having an impact here. 11.1%, the latest CPI reading, and talk that we have not peaked yet.
Yes, it's a 41-year high, and as a mark of what an upside surprise it was, only one of the 35 economists surveyed by Bloomberg saw it coming. As you say, driven by gas and electricity price growth, despite the government's support on energy, which means it's even harder for the Chancellor Jeremy Hunt in his fiscal statement tomorrow to withdraw or target that support further. Indeed, what he does on energy is going to be the biggest determinant of where inflation goes from here. We've heard from the Prime Minister Rishi Sunak in Bali this morning. He says number one priority for the government is fighting inflation. Take a listen to this.
My absolute number one priority is making sure that we deal with the economic situation that we face at home. You know, with more news of inflation today, it's the number one thing that's on people's minds. It's the thing that's causing most anxiety. Opening up bills, seeing the emails come in with rising prices, and that's why it's right that we grip it. And tomorrow the Chancellor will set out a plan that will enable us to do that.
So the Prime Minister there, but as for the Bank of England, this means one thing, more hikes, and money markets are now pricing for rates to rise to 4.65% by August. Of course, the Bank of England had pushed back against market expectations at its last meeting, but a print like this was not in the script.
Yeah, absolutely. I wonder what it does to the bank's expectations now then. Thank you very much, Lizzie. Bloomberg's Lizzie Burden with the latest on the UK CPI print, working our way towards that autumn statement from the UK government tomorrow. Coming up on the programme, or in fact later in programming, we'll continue our focus on the geopolitics. Alexander Stubb joins us, former Prime Minister of Finland. He'll have a lot to say, of course, on the latest on Poland. And Freya Beamish, TS Lombard chief economist, will be with us this hour to talk about where the economy heads next. That's the UK and the global economy, of course. Leslie Vinjamuri, Chatham House director of the US and the Americas programme, will also join us later this hour to talk about former President Trump and his bid once again for the White House. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A
piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. Back to our top story. Leaders are urging caution after a rocket struck a Polish village just over the border from Ukraine. We've just been hearing that President Biden at the G20 has been briefing leaders that this was caused by the Ukrainian defense system. Let's get analysis now. Alexander Stubb joins us, former Prime Minister of Finland and now Director and Professor at the School of Transnational Governance. The facts are thin on the ground, Alexander. Thank you very much for joining us. The impact on Poland, clear, very geographically close, of course, to a war zone. And now we get a reminder of the dangers of that situation. What is your early assessment of how the West should treat these latest developments?
Well, in my experience, it's very important for all parties involved, including the governments, to simply remain cool, calm, and collected. And that's pretty much what we saw last night, because, of course, were you to judge things over Twitter, there would have been a full-blown revocation of Article 5 and escalation of the conflict. I think it's very good to go through the facts on the ground and see what's happening, what's happened, and then make an assessment what the necessary action is.
So from a NATO perspective, would you expect to see action taken here, Alexander, and what might that be? There's been talk of Poland wanting to trigger Article 4, which is essentially more conversations and talking about a possibility of response, not Article 5, of course, but Article 4. Others are saying this leads to more urgency to try and introduce some kind of no-fly zone around the border areas. What would your assessment be of what NATO should do?
Of course, I have to be very careful on two accounts. One, I come from a country which is not yet a NATO member state. And then, of course, two, I don't have the latest intel. But I can imagine that the line of action is to talk around Article 4, what kind of action is needed. And I think politically what we'll probably see is more support for Ukraine. So this could have something to do with no flight zones, or it could have something to do with missile defense systems from the air, because these types of accidents shouldn't happen. They're in many ways dangerous, and also a reminder of how really close we are to Europe. We're in the center of Europe with this conflict, and it shouldn't spill over.
You are very close indeed to Russia as well. I wonder, I mean, not now, I believe you're in Italy, but of course, when you're in Finland, you're right next door. How much of a concern is this aggression from a neighbor? How much of a concern do Finnish citizens have that Russia could come for them next?
Well, I think our NATO membership is basically an indication that the level of fear in Finland and among the population was increased. So the feeling was that if Putin can do this to Ukraine, why couldn't he do it to Finland? Now, the realities of the ground right now are, of course, different in the sense that we are in Finland very well prepared for an escalation, but we do not think that that will happen. We think that Putin, Russia, and his military has his hands full right now in Ukraine, and for all intents and purposes, is not exactly showing a stellar performance. So I think Finns are quite calm at this stage. We feel very secure about the situation on our border.
How involved can Finland and NATO get in the defense of Ukraine? We've seen, obviously, weapons shipments constantly throughout this Russian war, as well as money transfers. Are you also able to help train Ukrainian army soldiers to use these weapons? Can you conduct any kind of air defense close to the borders? How close can we get?
Well, I'd say that there is ample coordination taking place inside the European Union, which has been in the front line on the sanctions policy, and of course in NATO as well. But then the actual action, in other words, providing military equipment, providing finance, or providing training, that is very much bilateral. And from what I understand, the Finnish government, for instance, has taken 9 or 10 decisions on sending arms. And from the reports that I read, there have also been Finns, not government official, but Finns helping Ukrainians to use those weapons and train them. So it's this type of intergovernmental bilateral support that a lot of countries in Europe, whether NATO states or not, are giving at the moment. And I think that's a good thing, and I think we're going to see more of it.
Alexander, you've taken care to mention that you are speaking not as a member of NATO, which Finland still is not. Do these events in Poland increase the urgency for Finland and Sweden to join that alliance?
Well, yes and no. I mean, again, I feel quite comfortable where we are because we do have bilateral security guarantees, for instance, signed with the United Kingdom. I would also argue that we have bilateral security guarantees from the United States. And given that we're basically in the waiting door, just outside the door for full membership, we do feel quite covered. And I think that other NATO member states like Hungary and Turkey, which still haven't ratified our membership, realize that we are actually a security provider in the Baltic Sea region. So I wouldn't make the final ratification or the press of the button the big issue here. De facto, we are already members of NATO.
And finally, Alexander, we are seeing here in the U.S. funding for Ukraine being a little bit of a political issue. There is waning support for that here domestically in certain sectors of the political economy here. What is your sense of the unity of support among Ukraine's allies at this point, and how soon could it start to deteriorate?
Well, we don't live in a perfect world, so don't expect everything to happen in unison. There'll always be sideline conversations and a little bit of opposition. I am actually positively surprised that war fatigue has not hit in yet. And I think these types of events and the types of, I would say criminal attacks on civilian targets by Russia will increase the unity. So the European Union has already agreed to give over 1.5 billion euros per month. Top that with the bilateral aid. I think we all understand that we have to help Ukraine on 2 accounts. One is to win this war, and 2 is with reconstruction. So I do expect the support to continue with, of course, a few side noises on the way.
All right, Alexander Stubb, the former Prime Minister of Finland, thank you so much for your time today. Really appreciate it. Now let's keep you up to date with other news from around the world with the first word. Apple is taking a major step toward reducing its reliance on Asian production. Bloomberg has learned the company is prepared to begin sourcing chips for its devices from a plant being built in Arizona. Apple CEO Tim Cook has said the factory will start up in 2024. Senator Rick Scott will challenge Mitch McConnell for the chamber's top Republican leadership post today. Allies of the two men have been trading blame for the GOP's disappointing performance in last week's elections. McConnell says he has the votes to continue as the Republican leader. And it's NASA's most powerful rocket in 50 years. Early today, it roared into space, carrying an uncrewed capsule on a 25-day mission to orbit the moon and safely return to Earth. The flight kicks off NASA's multi-mission Artemis mission, which is focused on sending astronauts back to the moon's surface by as early as 2025. So, Anna, rockets rocketing into space and inflation continuing to rocket higher in the UK, where you are, and that is where we will be focusing next.
Yeah, safely with our feet on the ground, then we'll stick to the macro conversation next. We'll get to Freya Beamish, TS Lombard, chief economist, who'll join us. We'll get her reflections on the UK economy as we see that inflation picture in the UK continuing to gain ground at a 41-year high. So far from the peak inflation conversation that's happening in the United States, it seems that the UK conversation, inflation set to linger longer, and perhaps we don't see a peak until the spring. We'll get Freya's view next. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person, I have to worry about my family, I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. President Biden and key European leaders urge caution after a rocket hit a village in Poland. Uncertainty remains over who fired it and from where, but President Biden at the G20 has been briefing that this was possibly as a result of Ukrainian air defenses. It's official, Donald Trump is running for president again. His announcement comes as some Republicans are saying it's time for the former president to move on. Inflation hasn't been this high in the UK since 1981. The latest numbers show the consumer price index up more than 11% in the last year. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, markets really shaken by the geopolitical headwinds over the last 24 hours or so, but now looking a little calmer, waiting for confirmation of what exactly happened between Ukraine on that Ukraine-Poland border, and looking perhaps to try and move on to some macro trends.
Yeah, absolutely. I mean, we did come down pretty significantly yesterday, only to recover by the close. In terms of the S&P 500, we were up about 1.5%, and then dropped down to but came back to close up 0.8%. We closed at 39.91. You can see futures right now pushing up 1/3% to 4,012. So we didn't close above the 4,000 level, but very close, and we could head up through there, at least intraday today as well. We'll see if we can hold that close. The dollar has been really important in terms of a headwind when it's strong and a tailwind when it's weak for equities. So it inversely correlated, so to speak. Right now it's down, and that should mean that risk assets go up. You can see the Bloomberg US Dollar Index at 1271. The US 10-year yield also has been inversely correlated, and you can see that the 10-year yield is currently up right now, just about 1 or 2 basis points to 378.81, but it doesn't look like it's strong enough to derail the futures gain that we're seeing right now, as slight as it may be. Bitcoin down 1% from wherever we measure the close. I don't know if it's midnight or 5 p.m. yesterday, but the point should be it was exactly at this point yesterday, $16,700. Of course, Bitcoin never really stops trading. It just continues 24/7, 365, and it has been really the focus of the news cycle until this geopolitical event yesterday pushed it out. And I guess now we're still going to talk about FTX, Kaylee. We're still going to talk about earnings, but it's very important to deal with or to see how nations deal with this missile in Poland.
Yeah, definitely a lot of things for this market to keep tabs on. But earnings, as you mentioned, Matt, is one of them because we still have companies reporting, including Advance Auto, which is an auto parts retailer. It reported after the bell yesterday, missed expectations, cut its outlook. Analysts pretty disappointed with the report overall, and the stock is getting hit hard in pre-market trading as a result, down about 13%. You also have a big decline for Carnival Cruise Lines. This is after it offered a private offering of convertible notes of about $1 billion. So that stock is down about 12%, and interesting to see that filtering through to its peers in the cruise space as well. Norwegian down about 3.3%. Royal Caribbean also lower by about 2.5% before the bell, Anna.
Those are some of the stock specifics to watch then stateside as we get towards the start of the US trading day. Here in Europe, a couple of hours into our trading session, we're down by 0.4%. The first chance, of course, for European stocks to react to what happened in Poland late in the early in the European evening yesterday. So we see some tentative moves a little bit lower. The London market outperforms, though, because energy stocks are actually going higher on a higher oil price. The auto sector is underperforming. Mercedes is one of the stocks in focus there. They've reduced the price of some of their cars, their EV vehicles over in China. The Polish zloty, of course, in focus, and this actually showing that the US dollar is down against the zloty, so the zloty gaining ground that it lost late yesterday. We saw the zloty sold off against the euro and the US dollar yesterday. We also saw that the euro sold off against the US dollar, but both of those risk-off moves have been unwound to a large degree as the market tries to get some sense of really what happened on that Poland-Ukraine border. 6 kilometers into Poland, of course, is where that rocket landed, and a few details still missing as to what exactly happened there, but the market trying to move on from that story, it would seem, Kaylee.
All right, Anna, well, let's focus back on the story in the UK with an 11.1% inflation print earlier today. Joining us to discuss is Freya Beamish, TS Lombard Chief Economist. Freya, how close are we to the peak, and what does that mean for the BOE?
I think exactly where the peak in the year-over-year rate comes, I would focus in on the month-on-month moves in the core, and that was disappointing in the October data. So what we have to remember as economists is that the pass-through always takes longer than we expect. The lags are always longer than we expect. But my source of optimism in this case, in terms of the near-term trajectory of UK inflation going into the first half of next year, is that if the US can print a good inflation print, then the UK can, because there's no the demand supply underlying mismatch in the UK economy is not greater than that of the US economy. So I think what we're seeing here is still continuation of the feed through from energy prices, food prices to an extent, the depreciation of sterling, and it's all just taking a very long time to be digested into the real economy.
Isn't that a huge differentiator, Freya? Isn't the depreciation of sterling a big differentiator between the UK inflation problem and the US inflation problem? And in fact, just one of many differentiators?
Yep, absolutely, and I think that's why we're still seeing UK CPI print higher or continue to be worrying rather than the less worrying numbers that came through from the US, and we're probably still in that camp into next year. But it is all kind of cost push feeding through to the domestic situation. There is underlying a demand-supply mismatch, but that is the same for the US as it is for the UK. It's just there's more kind of cost push inflation. So that's why I make the comparison between the US and the UK in terms of what the Bank of England can actually have an impact on. The kind of the demand-supply mismatch is no greater in the UK than it is in the US. And in fact, if I was looking just at that pure kind of domestically generated inflation, what starts to bring down prices is when demand starts to crumble. And the UK has the energy shock that is destroying demand. They have the yields that are destroying demand, and all of that feeds through much more quickly in the UK than it does elsewhere.
Okay, given how hot this inflation print was, Freya, and we talked about the headline, you said you referenced the core number as well. What does that do to Bank of England attempts to talk down market-based measures of rates? Because the BOE objected to how high the markets had pushed interest rate expectations previously.
It's a big spoke in the wheel. I think the Bank of England is right that we're unlikely to see terminal rates go anywhere near where they were, certainly at the height of the Truss Kwarteng kind of debacle, up at that kind of 6% terminal rate, above 5%. The point is that UK demand is much more responsive to the shocks that we've seen than even on the continent. So there's a higher proportion of the energy sector, which is privately owned. Therefore, the price shocks feed through more quickly. There's most of the vast majority of mortgages are on 1 to 5 year fixed rates, and therefore the yield shock feeds through much more quickly than it does on the continent. So demand is really going to crumble much more quickly in the UK than elsewhere, and that does the Bank of England's job for it. It's bringing that demand-supply mismatch back into line. Further down the line, we can have this conversation again, because I think that all of the kind of the disinflation mirage that I've just talked about is in fact a mirage, and that the entire global economy is going to a higher inflation rate to the tune of kind of 3% for the US and probably the UK, Freya, rather than the 2%. But Freya, that's for further down the line.
We had markets breathed a sigh of relief and really put in buy orders after CPI came in under estimates at 7.7%. We were looking for 7.9%, still incredibly high. Yesterday, we saw a similar story with PPI down to 8 even. We were looking for 8.3. Are you saying that's a mirage? We don't have, inflation getting back under control in this country?
I think it is a mirage, but I think the mirage can last for quite a long time. We've had a fake recession in the first half of the year, and now we might have kind of fake inflation slowdown just based on kind of the extreme heat of COVID coming off again. But there are really fundamental shifts within the global economy, within global labor markets, particularly with the relationship between the Chinese labor market and developed market labor markets, that point to higher inflation. I could list a whole bunch of secular trends that suggest that we're moving in the direction of higher inflation. So that's the sense in which I mean that this is a kind of a mirage as inflation comes back down. I think I can easily construct a way in which you get US core inflation to 4%, 3-month annualized rates by Q2 of next year. You have to get zero increase in core goods inflation. And you have to get zero input from transportation services, so oil has to stay contained, which is possible. So I can construct that kind of mirage of disinflation lasting quite long. But where does that leave the Fed when you get into the first half of next year? It leaves them looking tight, and therefore they start to cut much more quickly than people are expecting. So we're more hawkish on the way up, but we're also more dovish on the way back down.
And on your subject of the mirage, it reminds me of the Apple story. They're talking increasingly about sourcing chips from home, and you wonder if that's a deglobalization trends that other businesses are on, where that takes us. Freya, thank you so much for joining us. Freya Beamish of TS Lombard. Coming up, we'll return to US politics. Leslie Vinjamuri joins us, Chatham House Director of the US and Americas program, a day after we heard from former President Trump that he wants to run again. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
This is a movement. This is not for any one individual. This is a job for tens of millions of proud people working together from all across the land and from all walks of life, young and old, black and white, Hispanic and Asian, many of whom we have brought together for the very, very first time.
Donald Trump there announcing his 2024 run at Mar-a-Lago in Florida last night. Joining us now is Leslie Vinjamuri, Chatham House Director of the U.S. and the Americas Program. Leslie, we knew this was coming in a sense, but I think it's really interesting because he doesn't seem to have the kind of momentum that he had coming out of the presidency. And I wonder if you think he kind of splits the Republican Party pretty seriously here.
Yeah, I mean, there were a lot of people in his own party, we've seen those interviews that clearly, at a minimum, were hoping that that Donald Trump would wait until after that December 6th runoff in Georgia to make this announcement, primarily because his party and so many people around him understand that he is not delivering the goods. Those midterm election results, those candidates that he backed across key races for Secretary of State, key races for governor and battleground states, most of them lost. And so I think we have seen a division not only at the top, but, across all levels of the party, whether it's, McConnell facing a challenger, McCarthy not getting 100% of those votes in the first round, DeSantis clearly coming up as somebody who looks set to challenge President Trump. So this is a complicated next step, but for the entire Republican Party, it's complicated.
So it's a fractious Republican Party, Leslie. What about the Democratic Party? Because that isn't necessarily a picture of perfect unity either, considering you have the more moderate ring, the likes of Joe Manchin, which has caused some difficulty in getting legislation through, and then the progressives on the other end.
Absolutely. But, that's a conversation we've been having for 2 full years. And so the Republican Party is getting the attention now because this is new. Donald Trump had a grasp. He had a grip on that party. So, yes, the Democrats have come through this election looking far better than most people anticipated, riding a high at this moment. Inflation, looking a tiny bit better in the short term. The war in Ukraine looking, different. But, once the new Congress convenes, of course, we're going to see a much more difficult picture for President Biden. Any, future legislation will come to abrupt halt. There will be investigations of the president, of his family. The Democratic Party knows this. They've been preparing for this. That's why we've seen so much push on getting legislation through. We're going to see more in this window, this narrow window. We're already seeing the announcement yesterday, the ask for another $48 billion. But yes, both parties are now going to face some very important questions as they lead up to, it's still a long ways off, that primary season. but that is what is in their line of sight.
Right, a long way off, and yet we've heard from former President Trump already, Leslie. What difference will it make that the U.S. media landscape has changed its view? Some prominent players, at least, have changed their view of Donald Trump since he was in office.
I think this is a really important point. The fact that Murdoch has pulled his support, that the Wall Street Journal, Fox, the New York Post are all coming out both against Donald Trump and in favor of Ron DeSantis is a very significant fact. This is a former president who came to power on so much free press coverage, even from those who didn't like him. So I think the next question is, is the coverage negative? It's going to be, but is it going to drop? And we did see, last night during his very long speech that at a certain point, the media pulled the plug and stopped covering it.
Well, and also, does Donald Trump use this as a bargaining chip, eventually trading his support for DeSantis for guaranteed immunity from future prosecution?
Yeah, that's going to be hard. Courts, despite the better, the better hopes of some people, very prominent people, courts remain independent, and I think quite determined to pursue the cases that they're looking at. So, beyond
a presidential pardon always helps.
A bargain always helps, but I would be surprised, but I guess nothing is off the table.
Leslie, finally, just quickly, you raised the issue of Ukraine a few times here and the idea that the Biden administration is going to try and push through billions more in funding before a Republican House could make that more difficult come January. Where does the U.S. and allies stand now, especially as we all assess the headlines coming from Poland in the last 24 hours?
Well, I think, the number one thing on that specific, what's happened, the missiles that we saw yesterday or overnight, first of all, investigations and clear, considered effort to determine exactly what happened. We'll see President Biden and America's NATO allies coming together to take very careful, very well-considered, very measured decisions about how to respond in a way that won't escalate, but will send a very strong message. Should the determination be that those were Russian missiles, that there was an intentionality, all questions that we have yet to see. The bigger question, of course, is that I do think that there's going to be a considerable effort to keep NATO allies aligned. I don't really see, what we were worried about before, that the Republicans would peel off America's support for Ukraine. Yes, there will be questions. Yes, there will be oversight, but the American public continues to be on the side of supporting Ukraine, especially as things have looked better and pushing forward so that and I don't think we're there yet, but when we get to the point where there is a prospect for a settlement and for a serious negotiation, that Ukraine's in a very good position in that negotiation.
Leslie, thanks very much for your time. Leslie Vinjamuri joining us from Chatham House. And sticking with this theme of U.S. politics, coming up on Balance of Power, Senator Ben Cardin joins the team, Democrat from Maryland, and that conversation is at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now, TikTok is addressing U.S. national security concerns, partnering with Oracle in storing cloud data in what it calls Project Texas. This, as the popular Chinese-owned video app, comes under FBI scrutiny. We spoke with the TikTok CEO at the Bloomberg New Economy Forum in Singapore.
We're going to move the data that we store in Virginia and in Singapore into Oracle's cloud infrastructure. That's our partner. Oracle's going to look after it for us. We're going to have new and improved data access protocols such that only an entity of U.S. residents that in the U.S. will have access to a certain set of U.S. protected data.
Obviously now the others are trying to catch up. What do you make of all the copycats? I mean, you have Instagram and Reels, you have YouTube with the shorts. Elon Musk has at least mused about bringing back Vine. How worried are you that they're going to get it right and do something similar?
It doesn't really come as a surprise that many other products are adapting and adopting the short video format. You know, for us, we come back to this. We believe we have a very unique mission and vision that we want to build. And every other company is a little bit different like that. So we're very confident in our ability to deliver our mission to our users in a way that the competitors won't be able to.
Now, if the Biden administration goes back to the Trump view and tries to force a sale, do you have a plan B?
Because of the discussions that we are having with the U.S. government, we are confident we can come with a reasonable solution to the national security issues. And so we are confident that that's a situation we can avoid.
That was the CEO of TikTok speaking at the Bloomberg New Economy Forum in Singapore with our very own Retta Grigori. And that New Economy Forum continues today and throughout the week. But let's take a look at what else is ahead today. It is the final day of the G20 summit in Bali, where the war in Ukraine is front and center in conversation. Then at 10 a.m. Eastern Time, the BOE Governor Andrew Bailey appears before the Treasury Committee to answer questions about the quarterly monetary policy report released this month. Plus, we have ECB President Christine Lagarde speaking at 12 p.m. And the earnings continue here in the U.S., Matt. We have results from retailers like Target, Lowe's, TJX, and of course, it'll be interesting to see if Target follows Walmart, its peer yesterday, which had its best day since July 2020 after its results.
Yeah, absolutely. I mean, front and center for both Target and Walmart is the inventory story, right? How much have they sold off of the excess inventory that we've all been watching, and how are they preparing for a holiday season? That'll be interesting as, Anna, you know, some of the shipping companies like FedEx is furloughing people, and we're going to hear from, I think, DHL tomorrow.
Yeah, absolutely. That's a really interesting story to watch. Logistics providers and what they're telling us about how quickly the U.S. economy or the global economy decelerate towards the end of this year. Certainly a theme we watch. That is it for Early Edition. Surveillance is ahead. Tom, John and Lisa will be here with you to take you through the news. This is Bloomberg.
Successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
As much as 100% of people thought we're going to have a recession next year, maybe 100% of people thought you need to buy into this rally.
The Fed might start to throw cold water on this rally.
It seems you're expecting a hard landing. But I think the earnings recession always has to follow through in this situation.
The question is how quickly we will get closer to the kind of target that central banks are pursuing.
Inflation can come back down quite quickly, but history suggests that that's an outlier.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Did you do your World Cup bracket?
Did my World Cup bracket. I'm reading in The Athletic. Good morning to all in The Athletic. I'm reading every word of it.
I'm so proud of you.
First I did it in pencil because I put down Italy for you, and then I realized that wasn't really the right way to go.
Great start to the program.
Good start to the program here.
Live from New York City this morning. I guess it's a good morning. Good morning. Equity futures right now on the S&P 500, positive 0.1%. Tons to talk about. Retail sales later on this morning. TK, we've got to start in Europe and Poland. The attack that killed 2 people at a village about 4 miles from the frontier with Ukraine late yesterday.
I listened very carefully to Rosalind Matheson collating all of our government reporting on this. I believe she's in Singapore at NEF, and Rosalind said it's still uncertain. The theory is it was a defense by the Ukrainians against a Russian missile, and I'm going to say it deflected it into Poland. But this is important, folks. We don't know.
Still one theory, Tom. And there are many theories. That one theory suggesting that air defense system knocked that projectile off course. That's one. Still not clear who launched that, who launched it, and where it launched from.
Exactly.
We still don't know so much about this, and I think things have settled down a little bit compared to where we were, Tom, yesterday afternoon.
Yes. Yeah, you see it on the tape as well when you combine in the equity lift yesterday off lesser inflation, Fed speak and such, and then the gloom that hit off of the unknown of Poland. I think we're in a better position now. Can I note Standard & Poor's 500, 4,006?
Sure, you can. This rally's been phenomenal.
Well, I'm in cash, so
backed up by the numbers from Walmart, and I believe we get Target a little bit later this morning. Also need to pick up on CPI out of the UK. Inflation in the United Kingdom, Bramo, brutal, not just year over year, but month over month. That's not going to help the Bank of England's cause at all.
So 11.1%, just the number itself is pretty stunning. And then pair it with a 10.9% expectation, hotter than expected on the heels of energy. And this just highlights, sort of pairing back to the story about that missile in Poland. It ties back to the tenuous situation of what we're looking at with respect to energy and how that could entirely shift the entire region and how fragile it is, because if there is a misstep, the escalation could result in a completely different scenario.
John, I double barrel it this morning, the great op-ed by Javier Blas, expert on hydrocarbons, and he makes real clear underlying food inflation doesn't appear to be that bad, but you overlay in the energy expense and the labor expense, and you get out to that 16% statistic. Fish and chips, I looked it up.
Okay,
is
here
it
we
Leicester
go.
or Lister?
Leicester.
Leicester, I wasn't sure.
Where did you look?
Leicester, the Leicester Times, you know, it's I don't know
is
where
that
it
a
is.
proper newspaper?
I have no idea. Fish and chip takeaways, they're called in the United Kingdom, caught up 75%.
Food and beverage prices up 2% over the month.
Yeah.
Pretty much everything across the board, with the exception of, I think, tea and coffee in the United Kingdom. But it's the energy issue in the UK that's front and centre, Tom. Inflation, according to the Office of National Statistics, would have been 13.8% in the UK if the government hadn't introduced that energy price guarantee. This could have been so much worse, Tom.
Sterling 119.24 coming off that 103 level. Stronger sterling.
Hey, we'll talk about FX a little bit later too. Let's talk about futures right now. Positive by about 0.1% on the S&P 500. A little bit of a lift again in this equity market going into the opening bell a few hours away. Equity futures are higher. Bond yields just a little bit higher as well by about a basis point on a US 10-year. Bond yields up to 378.44 TK. And FX for me, TK. Let's just get our teeth into this.
Yes.
Euro dollar 104.30. Yeah. Think about where we've been on euro dollar. 95.36 is the low of the year. That was only a couple of months ago.
It's been a real move, and then it's sort of like leveled out here. And it's going to be fascinating to see what the bets are out to January, or even out more than that. So, you know, I see DXY 106 down from a 112 level is how I'd frame it.
Cable 103.50, lows of the year, end of September. Yesterday, Tom, 120.
It's a big move, and again, it comes off the politics and what Mr. Sunak's doing.
Bramo needs to talk about crude as well. 87.25. We're positive there by about 0.4%.
It's sort of the push-pull between the recession that so many people are expecting, and then on the flip side, this idea of what we're expecting over in China, that possibly could get a reopening, and that does seem to be all of the feeling right now in markets. We had a host of Fed speak today as far as what I'm looking at today. New York Fed President John Williams, Fed Vice Chair for Supervision Michael Barr joining the House today instead of the Senate yesterday, and Fed Governor Chris Waller. How are they going to indicate recession? They're getting closer and closer. Michael Barr yesterday in front of the Senate talked about a really painful downturn. How much are they getting closer to actually predicting recession? I'm curious about that also next month at the Fed's meeting. 8:30 a.m. we get U.S. retail sales for October. They are expected to be artificially high because of some of the auto sales to replace those that were destroyed in the recent storms in Florida. How much, when you look under the hood, are people pulling back on expenditures, and how much are they shifting down to cheaper ones? And that really brings us to the earnings that we got yesterday with Walmart, with Home Depot, and the earnings today. We're going to be getting Lowe's, Target, TJX, all before the market, and then NVIDIA after market. How much are people really retrenching as they take a look at their shrinking buying power? And John, that's one of the big mysteries. How much have people actually spent the savings built up from the pandemic?
I totally agree. How resilient is this economy, and what's the gap between all the tightening we've seen, TK, and the economic damage potentially still to come?
Well, there's the economic damage to come, but it's also the little tea leaves right now, John, which have, you know, tea leaf by tea leaf have been a calming influence, which gets you to SPX 4001. When was the last time I talked about capacity utilization, which is a statistic from my youth? And here it is up and elevated above 80. Again, that's this oddity of all the angst we have out there and yet it's a pretty good, it's not a recession
Supply coming
economy.
back? You think supply coming back just a little bit?
I think my take is it's supply side dynamics, and it's much harder to judge them than it is to look at demand side analysis.
Let's get into this market right now with Russ Kostrick, portfolio manager for the BlackRock Global Allocation Fund. Russ, that cash position has been heavy for you guys all year. Have you trimmed it? And if you have, what have you done with that money?
Well, good morning. We have trimmed the cash position. It's still larger than it was, say 2 years ago, but it is down. And we put money to work in a couple of areas. First of all, we have brought our equity allocation back towards neutral. I think as you might remember, for a lot of the year, we were running fairly underweight stocks. Our beta to our benchmark is now close to flat. Another thing we've been doing is we've been adding carry and income into the portfolio. That's mostly taken the form of IG, some high yield. And the theory here is pretty simple. We think the market is going to continue to heal over the next year, but you're still going to have a more volatile environment. And when you think about where are you likely to get good risk-adjusted returns over the next 12 months, we're actually seeing for the first time in years a lot of opportunity in credit in parts of the fixed income market.
Russ, thrilled to talk to you, and I got 8 ways to go here, and where I'm going to go is 1975. I was in my youth, I was just out of school, and I had the clearest memory how no one believed the lift coming out of 73, 74. We had to wait for 1982 to really get the lift going. The excuse now is short covering. What happens after short covering?
Yeah, it's almost a good question. Look, I do think short covering, in the broader fact that people hated risk coming into the last month or two. So yes, I mean, the violence of the move, the magnitude of the rally off of the lows, a lot of that is short covering. You see that not only in the statistics, you also see in the names that have been bought. There's been this huge shift out of the momentum names, which has mostly been in staples, in healthcare, a little bit in energy, into some of the more speculative names that have been hammered all year. Having said that, even when the short covering ends, look, if we have an environment where we have either a mild recession or we avoid it, and we start to see that financial conditions are going to plateau, I think that's an environment where stocks can go higher next year. And the thing to keep in mind is there's a lot of money on the sideline. People have understandably been under-risked. If the fundamentals stabilize, it's not crazy. You're going to see money come back into the market.
So a lot of this is hard to understand what's sustainable and what's not, especially if it's short covering. And if there is still so much money that people have parked waiting to re-enter the market, do you believe that the peak dollar discussion is sustainable, that we're going to see further dollar weakness just simply because there is a shift in tone in Europe that the worst case scenario has been avoided?
We think it's a much more two-way market for the dollar. We were very overweight the dollar for much of the year. That reflected a couple things. The fact that you had this interest rate differential and the Fed being much more aggressive. It also reflected the fact that the dollar was probably the only reliable hedge for much of the year because, again, the source of risk was not slow growth, it was too much inflation. I think going forward, you have more of a two-way market in the dollar. We've been paring back some of our dollar exposure, but we're still in an environment where I think it's a little early to say that we've entered a prolonged dollar bear market.
Russ, wonderful to catch up with you, sir. Russ Kostrick there of BlackRock, looking ahead to 2023 and maybe even beyond. Deutsche Bank doing the same thing. Deutsche Bank's 2023 FX outlook dropped yesterday. The latest forecast, Tom, attests to an initial bumpy ride as the dollar's top is marked out through the first half of 23 before accelerating thereafter. The point that Ruskin and Sarah Velos make at Deutsche Bank is a really important one. This dollar story this year, you've got about 5 different stories. The UK, the policy flip-flop. Right. Europe, the energy story. China, COVID zero. Take your pick. You've got to work out the other side of the currency pair. And that's been tremendously straightforward this year because it's just been dollar strength, dollar strength. Let's see how it plays out next year if we get some dispersion.
And this is critical. If you overlay their FX chat over Mike Wilson's stock chat, there's not much difference. All these people are like looking for pivots somewhere along the path of 2023. To me, that's a new thing. He used to just say, here's where we're going to be. And now they're into this, there's going to be a pivot in May or a pivot in August, whatever.
Yeah. I think Torsten Slock of Apollo really got this conversation going last week.
I was here for that.
You were next to me. He said the sequencing is really important here. You're seeing signs of inflation roll over in America before you're seeing signs really of the economy get hammered. And that window right now is this investable window that Stuart Kaiser of Citi is optimistic about for the meantime. And Morgan Stanley's Mike Wilson essentially is saying that that window is going to shut in January. in January when you get the earnings for Q4, and he thinks they're not going to be too great, Tom?
I think the analysis in pivoting in 23 is complex, to say the least, to be charitable.
Agreed. Getting some headlines out of Poland. Poland
Yes.
says nothing suggests the missile hit was an intentional attack. It was likely Ukrainian air defense. No indication that the missile was launched from Russia. Going to pick up on those headlines with the team. Maria Tadeo and Anne-Marie Hordern coming right up, live from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden has told allies that the explosion in Poland was caused by Ukrainian air defense. Still, according to officials familiar with the matter, it was sparked by a Russian missile barrage on Ukraine. The explosion killed 2 people in a village about 4 miles from the Polish-Ukrainian border. Donald Trump says he wants to make America great and glorious again. The former president declared Tuesday night at his resort in Florida that he will run for the White House a 3rd time.
This is a movement. This is not for any one individual. This is a job for tens of millions of proud people working together from all across the land and from all walks of life, young and old, black and white, Hispanic and Asian, many of whom we have brought together for the very, very first time.
The announcement comes at a time when many Republicans blame the former president for the party's lackluster showing in last week's elections. Well, there hasn't been an inflation this high in the UK since 1981. October's consumer price index rose more than expected to 11.1% from a year earlier. Soaring energy bills were the big reason. The new data adds to the pressure on the British government and the Bank of England to act. And it's NASA's most powerful rocket in 50 years. Earlier today, it roared into space carrying an uncrewed capsule on a 25-day mission to orbit the moon and return safely to Earth. The flight kicks off NASA's multi-expedition Artemis mission, which is focused on sending astronauts back to the moon's surface by as early as 2025. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between 2 of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the 2 account for about 1/4 of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Stages of a sustainability revolution that has the magnitude of the Industrial Revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority. Names at the Fed are on Bloomberg.
I think it will probably be appropriate soon to move to a slower pace of increases, but we have additional work to do.
Nobody covers the Fed like Bloomberg.
To support Poland's investigation into the explosion in rural Poland near the Ukrainian border, and then we're going to collectively determine our next step as we investigate and proceed. There was total unanimity among the folks at the table.
The President of the United States, in the last 24 hours following the attack that killed 2 people at a village about 4 miles from the frontier with Ukraine late Tuesday in Poland. What matters here is origin and intent, and what we've heard from the Polish leader Duda just moments ago. On origin, no indication the missile was launched from Russia. On intent, nothing suggests the missile hit was an intentional attack. Tom, Duda went on to say the missile hit was likely Ukrainian air defense. So things just calming down, Tom, in the last couple of hours in a much more profound way.
Let's get out the map, and we do this from Bali to Brussels with Amory Horder in Bali, Indonesia at the G20 meetings, and Maria today, of course, on duty in Brussels. Maria, the map is from Belarus straight down on the Polish border with Ukraine, something in the vicinity of 220 miles from Warsaw, but very near Lviv. Do we have any idea that this missile, where it was going before it was presumably deflected?
Well, Tom, we're going to find out, and I can tell you everyone that I know, every single diplomat that I speak to here in Brussels representing the European Union is glued to their phones and their TVs because they want to hear from the NATO Secretary General in about 15 minutes. But we already have indications from the Polish government, and this changes everything, in which they say they have no early indications that this was directly aimed at Poland from Russia. They do not see the intention from Russia to hit Poland. Now, that is confirmed by NATO. It changes everything. But I would also say today there's massive relief because of the words of the U.S. president. I'm sure Anne-Marie will go into detail about this. There was no intent from Russia. But for a lot of Europeans this morning, waking up again, what an eye-opener. This war is very active, and it is happening right here in Europe. The risk of a geographical spillover, they're very real.
I would suggest to Anne-Marie Horder that the president learned lessons with the exit of Afghanistan and has invented the Biden intelligence method, where he's very forthcoming in intelligence that used to be secret. Is that what we're seeing here with his comments on this missile?
Right, his comments directly to the press was that it was unclear in the preliminary data that he was shown that this came from Russia, and then Bloomberg News reporting that this is what he briefed
the G7 and NATO leaders he met with on the fringes of this G20, that it was likely from a Ukrainian defense missile. So potentially some of that debris going into Poland. But one thing we should make note, and this has been echoed not just by President Biden, by Olaf Scholz and others, the fact of the matter is that this all started because of Russia's invasion of Ukraine. 2 individuals are dead in Poland, and we have a rocket falling in Poland because of the missile strikes that are coming from Russia. And that is really at the heart of the matter. And as Maria said, these concerns have been growing since February 24th about how to make sure this is contained within Ukraine and not NATO being drawn into a wider geopolitical conflict.
To exactly that point, Maria Tadeo, how much is this raising a concern about what Vladimir Putin's next steps are as he is on a back foot with respect to his war in Ukraine? Does this indicate perhaps a bit more of an extreme view where he's willing to take risks and invoke some serious ire because of the fear of World War III and really the West's reluctance to engage in any conflict that could get us there?
Yeah, and well, of course, if you look at the Kremlin line on this and you follow the Russian narrative every day, essentially on TV, what they say is that ultimately this will come down to either World War III or victory, a sort of settlement for Russia. Of course, Western officials will tell you that is their take on things, and things can change. And of course, they stand by Ukraine and they hope that it's Ukraine that takes victory here. They always talk about a negotiated peace. At one point, the 2 sides will have to sit at the table, but whoever has the upper hand on the battlefield will get the better terms. But again, going back to what Anne-Marie said too, a number of European officials, including, by the way, the Dutch Prime Minister, also repeating, this shows yesterday the magnitude, the impact, just how bad Russia pounded Ukraine yesterday with this massive strike, which also, by the way, we talk about spillover. If you look at Moldova, that is a neighbor to Ukraine. They also had blackouts as a result of the hit on Ukrainian infrastructure. The game plan for the Russians when it comes to that is also very clear. They want Ukrainians to literally freeze this winter.
Maria, great to catch up. Thanks for breaking this down. Maria Tadeo there alongside Anne-Marie Hort-Dern. TK wrapping up the trip for the president. What a long week for him.
Long week, and of course from Egypt to here, and then some other festivities, and back to Washington. And think of the Washington he comes back to. It's always true. They go abroad, and any given president comes back to domestic challenges.
Do you want to talk about one right now?
There can be a few domestic challenges. I mean, where do you want to begin?
Is the former president a domestic challenge?
I don't really know what to make of it, to be honest. I watched a lot of the feed last night on it. You can take the personal nature of maybe some of his kids not involved. You can take the political nature of it. You can take the, we could talk all day about it. We could be pundits on this. Is that what we want to do?
There was a brutal quote in Politico last night off the back of Carrie Lake's failure to become the governor of Arizona.
Who was touted as a VP candidate.
Here's the quote.
Mr. Trump.
She is attractive, dynamic, energetic, articulate, better at the Trump style than Trump himself, and yet she cannot win Arizona against a candidate who barely campaigned.
I would also point out, and we've lived this in New York State, and it goes to Buffalo, New York. We've done this before. We've had a president who had 2 terms split. And that was Grover Cleveland. I used to call him Grover Cleveland Alexander, who was a baseball player.
Late 1800s?
1880, 1890. And he was maybe the first modern Democrat machine, Paul. I don't want to pretend to be an expert on this, but there is precedent for what President Trump is suggesting.
I think you could pretend to be an expert at anything.
No, I could pretend to be.
I think you could.
Let's talk World Cup.
The amount of times, Bramo, that he said stuff and someone's wrote into me and said, is he serious? Is that true?
And you're like, we don't know.
Nobody knows. People think there's an end zone in football now.
Well, there is, just not necessarily the football that we talk about every day. I do want to just say, when you said, does Biden come back to domestic issues that include former President Trump? Former President Trump is more of an issue for the Republicans right now than it is for President Biden. And I think that's really the issue. He's coming back to a pretty good position for him. It's really the bigger issue for the Republicans.
Can you imagine those primaries, Tom, over the next couple of years?
I don't think any of us can imagine it. It was original. He got into the race late in 2016. Now he's getting in early. But, and again, I would mention this again, not as an expert, the legal baggage he carries now is radically different.
But also, just going back to what President Biden is coming back to, he's coming back to a Democratic Senate. and a House that has a very slim majority for Republicans, do we start talking about the non-gridlock of December? Do we start talking about what that means for markets?
Well,
I mean, this is a new regime that he is coming back to than what he thought he would be.
Greg Vallier says the Washington solution is simple: spend money. We'll talk about that later.
Let's see if they can do that. Futures right now on the S&P 500 up about 0.1%. From New York, this is Bloomberg.